Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5% to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning, and should be used when economically sensible. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up. It's been resilient, and to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI spending will continue. The consumer continues to spend, so it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment and the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time, so it's basically a good thing, but that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against the cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're going to look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and that as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall that was the judgment that we made, and that's the action we took.
Just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. You know, we're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
No, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but you know, this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to, you know, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to, and I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say, and that's what we're doing now. It so happened that we've cut 3 times. That, you know, we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, you know, there's the announcement of a tariff, and then there's, you know, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, you know, it may take, you know, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. You know, we haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got to, when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very, you know, that's one part of it is inflation compensation break-evens. And, you know, they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation as their #1 concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their #1 concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry about the labor market, because the labor market unemployment was very low. If you remember when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability, and the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody, they have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low, if there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much, so it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Enda.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
the policy what? On
the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say there are also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and caught the really low, so it's made it expensive for them to move. And we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods. And we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? That's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think, again, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman, Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked, while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave, sort of every large economy in the world, sort of every large open economy market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
This year I said that the challenges of our time demand a new spirit of patriotism and national loyalty in Silicon Valley, smart people. Room with some of the most brilliant people. And I'd now like to ask Secretary Howard Lutnick to say a few words, and OSTP Director Michael Kratsios also say a few words. And I look forward to hearing from Michael a little bit about this subject. Cristiano, welcome. And Arvind, you'll say something, and I appreciate it. And anybody else wants to say a couple of words, feel free. Good job. So why don't we start with Howard, please?
So the key to America's success is the amazing innovators that we have. I mean, we have invented everything from the light bulb, transistor, GPUs. We are on the edge of everything. And we need to keep being on the edge, and the people at this table and this industry is why America's great. We need to build here. You know, for too many years, we innovated and we let everyone else build our stuff. And we just can't do it anymore. So with President Trump coming and winning the election on November 5th, we changed that, and now we're going to build it here. You've done everything you can, and you've heard trillions and trillions of dollars of technology build coming home to America to protect and defend us and use our innovations here. You're driving interest rates lower, and you're going to continue to drive them lower. That makes it cheaper. It makes it more exciting to build here. You're blowing out the regulatory deep state so that people can build here and do it fast. And the last thing is, because of our investment in energy, we're going to drive down the cost of energy for all Americans, including the people who are building here. Drive down the cost of energy. It's great for America. Put all of that together, and you're going to see the greatest growth the United States of America has ever seen. You're going to see north of 4% next year, and then it's going to go up from there to 5s and 6s. This president's going to drive the greatest GDP growth, led by the tech sector coming home and driving growth.
Well, thank you. You know, one of the things I'd like to say just before going over to Michael, and this Michael, and then we'll have this Michael, all right? But one of the things I'd like to say is, in the old days, when you announced really good results in this country, the stock market went up. And that's the way it should be. And we're going back to that. Because otherwise you can never really attain true greatness. In other words, GDP at 4. Oh, 4 is so high. Let's raise interest rates and kill it. And we're going to go back to the old days. When we announce great results, it doesn't mean we're going to raise interest rates and try and kill it. It means that instead of 4% GDP or 3%, which I said so wonderful, 3%, it should be able to be 20 or 25%. I don't know why it can't be. You shouldn't kill it. And so we hope that if this country announces great results, because you're going to see great results over the next couple of years, all these plants, and I'm not just talking about AI, we have the biggest number of auto plants planned. Toyota just announced $10 billion in plants built, various couple of locations, few locations in the country, just a little while ago. They're all coming here. They're coming here because of tariffs, because they don't want to pay tariffs, but they're coming here because of the election and the mindset. But when we announce good results, the market should go up. Now it's when you announce good results, Michael, the market goes down because they say, oh, that means things are good. That means we're going to kill it by raising interest rates. I think it's really wrong. It should be the opposite of what it is now. It should be the way it used to be. We announce good results, the market should go up, and we should keep driving it up and have it keep going up and let it be much, much bigger, much, much better. And, you know, growth doesn't mean inflation. They're always afraid that, oh, we have, and if there is inflation, that's okay, then we can slow it down. But we should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a you know, deadhead Fed hair. I mean, this guy, the head of the Federal Reserve is a stiff. And, you know, you fight that. It's amazing. We fight that, and yet interest rates are going down, except with him, not too much. He did a rather, I would say, a rather small number that could have been doubled, at least doubled. And that's the other thing. I think the rates for the United States are always the lowest in the world, because without us, there is no world. Without this economy, there's no world. You know, you could go to some of these wonderful countries that you think are so great. Well, one of the reasons they're great is because we allowed them to get rich off of us. We didn't charge them anything. You look at some of the deals. I don't want to say use Switzerland as an example, but Switzerland paid almost nothing in terms of a tariff or a tax or whatever you want to call it, license. They paid nothing, and you know they're paying now. They're paying a fair amount. I had them at 39%, but I decided to be nice. I was nice, and I think they like us a little bit better. But the money you're talking about is enormous. Our country is a very rich country. But if we do well, the market should go up and the value of our country should go up. And if we do poorly, the market then should go down. It shouldn't be the opposite. And if we go up, we should encourage it to go up more. And those numbers, when you say, you know, 3% of GDP or 4% of GDP, they should be much higher. So, you know, I've wanted to say it. I do say it. I believe it. And we have to get a mindset that when a country's doing well, you don't want to kill the growth. That's what they're doing. They kill the growth. I don't know if you guys even agree with that. They kill the growth because they're so afraid of inflation. But you can have tremendous growth without inflation. Everything goes up with the growth. But that's not inflation. So I think we can do much better than traditional numbers. And you see that. You see that with what we're doing. We're leading in everything. And now, and remember this, as far as prices are concerned, and they talk about affordability, I inherited the worst inflation in the history of our country. They say it was 48 years, but I say it was the history. What difference? It's 48 years, they were telling me. And they said, oh, I was being inaccurate because I said the history. I think 48 years is a long time, but it's actually, I disagree. I think it's the history. So in the Biden administration, I inherited the worst inflation in the history of our country, or 48 years. And prices were very, very high. I brought the prices down. We had yesterday 3 states where oil was at $1.99 a gallon. How about that? And, you know, with these guys, it was $4, $4.50. In California, it was like $7 because that's a badly run state. But the price for oil and gas and everything else, the price of gasoline was $4.50, $5. and we just hit $1 and we broke $2. I was looking forward to that. Couple of states, 3 states. And I will say that when that happens, oil and gas and energy is so big, it's so big a category, you don't even know what number 2 is. There is no number 2. And when you have the prices coming down for energy like that, you've killed inflation and you're lowering prices. So I inherited very simply the highest prices in history, and I'm bringing them down really fast, led by energy. And when energy comes down, everything else comes down. But I've only been here a short while, and we gave them a beautiful, beautiful thing, and they destroyed it. They would have destroyed our country had they been allowed to stay. If we didn't win this election, if we had Kamala, who's the same as Joe, low IQ people, but if we had Kamala, you would have a country that would be right now in ruins. I believe that 100%. Things would be in a state like nobody's ever seen before, worse than anything you've ever imagined, worse than 1929, in my opinion. Instead, we have the hottest country in the world, and we're going to keep it that way. But just to finish, we inherited high prices. We're bringing them down very rapidly, and we're bringing them down to very, very good levels. They'll soon be down at very good levels. Michael, please go ahead.
Absolutely. As everyone in this room probably knows very well, leadership in science and technology has been foundational to our economic and national security for decades. And because of the policies that you have championed and the private sector partnerships that you have made, America currently is leading the world in S&T, and it's benefiting all Americans every day. The one thing that I want to remind this group of, and many of you know, the president has been arguing for American leadership in AI well before ChatGPT was even invented. The president signed an executive order on artificial intelligence leadership in 2019, which set the stage for the revolution that we're seeing today. In the past year, we've built on that. We signed out the AI Action Plan in July of this year, which the president launched here in Washington, along with 3 EOs. And I know a lot of that effort is around creating a regulatory environment to allow for companies like yours to thrive and for the applications that you build to have the biggest impact on Americans every day. So thank you for everything that you do, and I know we're going to keep working together to make sure that America is the home for the next great technological discoveries.
All right, thank you, Michael. And Michael?
Thank you, sir. Well, look, we greatly appreciate the focus the administration has on lowering energy costs. And energy is the substrate of manufacturing at the industrial level, and really an incredibly important input to the economy. We can't be competitive without a super low cost energy industry. And had a great meeting earlier today with Secretary Wright, and really appreciate all the work that he's been doing. This is, of course, incredibly important when it comes to AI, because it does consume a great deal of power. All the semiconductor manufacturing consumes a great deal of power. Another big area of focus for us is how we can take all this great AI technology, the AI stack of the innovative companies here in the United States, and sell that around the world. And I'd like to ask Arvind to speak a little bit more about this. Arvind?
Thank you. So, Mr. President, first, we really would like to thank you for everything you're doing for economic growth, as you said. I completely agree with you. Economic growth then drives a lot of other benefits to everything else. We also want to thank you for all the work you're doing on deregulation and making things easier for business to participate in that growth. Michael spoke of the AI stack. It's incredibly important that under the action plans that you have laid out and Michael Kratzer just spoke of, we really help promote the AI stack, which is not semiconductors only. Those are incredibly important, but it's semiconductors, it's software, it's the systems which many of us here build, and it is the software applications on top. The ability to take those to all our friends in countries, so all the friendly countries, is going to be very, very important. And we wish to work with your government to make sure that we can do that, because otherwise we're afraid that competing countries are going to be able to get that stack. So we would say that.
Anything that you're looking at that we can help you with so that you create a bigger and better IBM and hire a lot more people? Anything you need?
A few countries, we'll speak to members of your administration to make sure that those can go and that barriers get lowered for being able to do it quickly. We agree guardrails are necessary, but lower barriers would be very, very helpful.
You mean tariffs?
No.
Because are these countries tariffing you any, making your life difficult? Are they doing anything else to make your life difficult?
It's the ability to take certain systems which have semiconductors inside them into these countries. So right now, because we have controls on where all the semiconductors can go, then the entire system is restricted. That's what we want to do. The same as
how many countries do that?
Probably a half dozen. So
I can tell you the countries already. I know.
Yes.
I know every country very well.
And
we have ways of combating that quickly. So you'll let me know.
And the last part I'd like to say is I'd also like to thank you for all that you're doing to help modernize government itself, because we think that that's incredibly important. You made a number of announcements, but a couple that I'd just like to point out, we worked with Commissioner Frank Bisignano to help make Social Security better. So I would like to thank you for your help on that. And we'll work with him on making IRS.
He's done a fantastic job.
He is. Frank's great.
He's done a great job, Frank. He's had a great career, actually. Left a tremendous career where his salary, I think, was 100 times greater than it is now. And he was at J.P. Morgan Chase, and he's doing a fantastic. He did a great job at Social Security, quickly.
And we hope to help him replicate that now at the IRS also.
Very good. Thank you very much. Good job. Cristiano, please.
Yes, just a few points. I think, first of all, Mr. President, thank you for your vision. Thank you for understanding the importance of the American private sector in industry, I think, and the growth of the economy. I want to just build on some of the things that were said by my colleagues. I think we have built probably one of the most advanced technologies in the world, and part of it is because I think the commitment to innovation that we have in the country, but also the fact that it has been American technology for the world. So I think we have an incredible opportunity. When I think about what Michael said about exporting AI, I had conversation with Secretary Howard. Now that the trade deal's been made, is an opportunity to really build on those trade deals and export, I think, American technology. And also, as we think about the technology, it's an important vector to drive the reindustrialization, I think, of the country with technology. So we're incredibly excited about that. I think it's a big opportunity. I think it's the next wave of growth that we can build on those trade agreements. And I think it resonates what also Arvind said about the importance of the American technology stack. And then we're just going to finish with 2 points. There are 2 exciting things happening in the world of technology coming right now. One is as AI become the new form of computing, AI is going not only to the data center, but to everything, to cars, to PCs. And we see now the ability to run models that you can only run AI in the data center. You can run that on a microcomputer, on a computer for Enrique, on a server, with small server on premise. So I think we're going to see the proliferation of AI. The other one is 6G. We had made commitment working with your administration, working with FCC. We're going to accelerate 6G. We're working to have a launch first in the world in the LA Olympics. And I think that's another opportunity for America to lead in the next wireless evolution. So thank you. Thank you for the opportunity. Thank you for the partnership. And we're going to be hard at work, I think, driving that agenda.
So we're into 6G now. I just finished 5G. I was a leader on 5G, getting that done. And now they're up to 6.
Let's do it again.
What does that do? Give you a little bit deeper view into somebody's skin? See how perfect it is? I like the cameras the old days. Sort of just had a nice feature. Now they cover every little. Let's see, Michael. Well, you're in good shape. You're not gonna. But I tell you, it's the 6 is coming, huh?
It's coming.
Does it ever end? And what happens? You'll be into 7, right? Before 6 gets old, you'll be into 7. Anybody have anything else to say? Anybody?
I think that the other thing is we want to thank you as well for the openness of your organization and your team. We always find people that wants to hear what we need and is willing to design programs that will support that. So thank you for.
Well, we're here to
It's
serve you.
very
We want you
helpful.
to just dominate the whole world in terms of what you do. It's a very important world. And you're doing that, and we're making it easy for you. And that means you're going to do it faster. It's more jobs, and a lot of good things happen. Right? Go ahead,
Maybe,
please.
Mr. President. You may not recall, but in your first term, you actually sponsored the Department of Energy to build the largest systems ever built. And thanks to your sponsorship, the Department of Energy owns the 3 top supercomputers in the world.
Yep.
And we build them with them. And these are systems that can do quintillion operations per second. And that means we can solve
I know. I
a lot
remember.
of
We made that possible.
a lot of
It's worked out very well. Good.
solve problems. So now we're going to build the next generation again.
Good. Sounds good to me. Any questions, please?
Mr. President. Thank you. Can you explain a little more about this Venezuelan oil tanker and share a little more information?
Well, I'll let the people do it, but you see the result, and I guess they probably have released the pictures by now or pretty soon. You'll discuss that with the appropriate people later on, but no, it was seized for a very good reason.
Cuba.
Sir, there's a new proposal from DHS that would see tourists from a lot of countries have to hand over 5 years of social media history to get a tourist visa. Are you concerned at all that if that's implemented, there would be a decline in tourism next year? And what sort of material do you think is...
We're doing so well. We just want people to come over here and safe. We want safety, we want security, we want to make sure we're not letting the wrong people come into our country. We're getting rid of a lot of bad ones from jails, from mental institutions, drug dealers. And we're getting a lot of bad people, murderers. 11,888 murderers, half of them, almost exactly half of them, committed more than one murder. We're getting rid of them. In some cases, we don't even want to get them out. We put them in jail because we're afraid they're going to come back into our country. We're not going to let them back in. So we've taken a very tough stand. And you see where we've been, like Washington, D.C. now, people walk down the streets, they go into restaurants at night. It's beautiful. It's like this beautiful thing to see because till I got here, this was a very, very bad place. We had a terrible thing happen 2 weeks ago with terrorism with regard to 2 National Guards people that are so phenomenal. One is no longer with us, and one, amazingly, we weren't looking with great hope on that, that Andrew. And today he got out of bed, actually, stood up, didn't say anything. It's a little early, but the chances of Andrew, other than his mother, who said, nope, he's going to be okay. His mother was the most positive person. And could be that she'll be right. It's pretty amazing. Made progress. It was, both of them were so badly hurt, we never thought that one could survive. So it looks like Andrew's doing pretty well.
Mr. President, the winner of the Nobel Prize dedicated the prize to you, the Nobel Peace Prize, and she left Venezuela at a great risk to make it to the ceremony. There is a risk she could be arrested, actually. What would happen if she's arrested? What message do you send, or would you send to Nicolas Maduro?
Well, arrested by who? The Nobel Prize Committee? That's probably the ones that would arrest. I don't know anything about it. She was very gracious. She said I should have gotten the Nobel Prize, and I don't, I'm doing this to save lives. I'm not doing it for any other reason. But no, I don't like if she would be arrested. No, I wouldn't be happy with that.
Mr. President, Senate Republicans currently have a healthcare proposal that would take away, let those ACA subsidies expire and then put about $1,000 in people's HSAs. Do you think that is enough money, and how do you ensure that people who will see those tax subsidies expire won't see their healthcare costs skyrocket?
Well, the Unaffordable Care Act, which is Obamacare, they call it now the unaffordable because it's unaffordable. It used to be called the affordable, but it was never affordable. It was always bad. It was basically designed for the benefit of insurance companies. And what we're doing is we want all of the billions and billions of dollars that went to insurance companies to go directly to the people, and they can buy their own health care. And people love it. I don't know if the Democrats are going to approve it because they want the insurance companies to make money. It was a scam. Obamacare was a scam. But we're going to see. I mean, the Republicans, I can tell you, want the money to go to the people. And we're winning that battle. the Democrats having a hard time with it because they're in the pocket of the insurance companies. Yes, please.
Yes, we spoke to some European leaders today, I think, sir, about Ukraine.
I did.
Could you tell us about that? And is there a new revised peace plan that Ukraine has presented?
The leaders of France, we spoke to, and Germany, and UK, all very good leaders, very good friends of mine, and we discussed Ukraine in pretty strong words. And we'll see what happens. I mean, we're waiting to hear answers before we progress. You know, we're not spending any money in Ukraine. We're selling basically missiles and everything else to NATO, and NATO's paying us, and then they distribute it to who they want. I guess they're mostly distributing to Ukraine, but we're not spending money. But you know, we're spending a lot of time and a lot of effort. Because last month, 27,000 soldiers were killed. Both, think of it, 27,000. That's if you take a football game and take half the stadium, that's 27,000. So 27,000 soldiers were killed. Russian and Ukrainian soldiers were killed. And I want to see that stop. We'll find out. Look, there are a lot of things happening right now. A lot of people say it's closer than it's ever been. It's a war that would have never started. If I were president, would have never started. It's a war that should never have started. But we'll have it figured out, I think, within a pretty short time.
Very strong terms, sir. Could you explain?
Well, I think we had some little disputes about people, and we're going to see how it turns out. And we said before we go to a meeting, we want to know some things. You know, they would like us to go to a meeting over the weekend in Europe, and we'll make a determination depending on what they come back with. We don't want to be wasting time. Sometimes you have to let people fight it out, and sometimes you don't. But the problem with letting people fight it out is you're losing thousands of people a week. It's ridiculous. The whole thing is ridiculous.
Mr. President, two questions. One, the oil tanker. Who owns that oil tanker?
You'll get that information later.
Okay, and have you spoken to Maduro since your last conversation?
No.
Or has it only been one conversation?
No.
And when you say that the European leaders want to have a meeting over the weekend, are you talking about with Zelensky or with them?
With Zelensky and us.
And you said in an interview yesterday that you think it's time for Zelensky to start accepting things. What things are you talking about?
I think he has to be realistic, and I do wonder about, you know, how long is it going to be till they have an election? You know, it's a democracy. It's a long time. They haven't had an election in a long time. It's losing a lot of people, and it's possible that the people, you know, if you look at the polls, I will say 82%, there was a poll that came out, 82% of the people are demanding a settlement be made, Ukrainian people. They want to see a settlement be made. I understand that. They're losing thousands and thousands of people a week. They want to see it ended. And I do say, you know, at what point, when do they have an election in Ukraine? That's not casting dispersions on anybody, but they do have a massive corruption situation going on there. And they do say, you know, when are they, people are asking this question, when do they have an election? Are they going to have an election? Or are they going to just keep it going like this? So I think it's time to get that war settled. And I think it's a war that can be settled. But it takes two to tango.
Mr. President, Warner about the new owners of Warner Brothers Discovery to make changes at CNN, big changes, and have you spoken to Jared about it? What are you doing with him, or are you just sort of walled him off a little bit?
So what do you want to know?
What changes do you want to see at CNN under new ownership?
Well, I'm not involved in that. I will be probably involved, maybe involved in the decision. It depends. You have some good companies bidding on it. I think the people that have run CNN for the last long period of time are a disgrace. I think it's imperative that CNN be sold, because you certainly wouldn't want to put people, just leave those people with some money, good money, and CNN, so that, you know, they can spend even more money spreading poison, because it's lies. It's a disgrace. So I wouldn't want to see the same company end up with CNN, the same company with money, because right now they don't have too much money, but they have value, I guess, based on the bids. They've got value, But I think CNN should be sold because I think the people that are running CNN right now are either corrupt or incompetent.
And that'll be a factor in the decision making because we've got some.
Well, in my mind, but I can be talked out of that by some very talented people that we have, antitrust people. But I just think that the people that have run CNN into the ground, by the way, nobody watches, very few people watch. I don't think they should be entrusted with running CNN any longer. So I think any deal should be guaranteed and certain that CNN is part of it, or sold separately. But I don't think the people that are running that company right now and running CNN, which is a very dishonest group of people, I don't think that should be allowed to continue. I think CNN should be sold along with everything else.
Sir, you spoke about affordability earlier in your remarks and yesterday in Pennsylvania. How much more can we expect to see you on the road kind of delivering that message? And are you worried at all about the Democrats winning a couple more things in Miami and Georgia?
I don't worry about it. It's like statistically, it's amazing. When you win the presidency, even if you win by a landslide like we did, and even if you do a good job, and some people say we've done the best opening 10 months in history, in the history of the presidency. I think we have. Who's done better? We ended 8 wars. We have the strongest economy. We have $18 trillion coming in, which is more than any country had, times I think 5 or 6. 18 trillion is a lot even in your standard, right?
Yes, sir.
Even for that guy, 18 trillion is big numbers. But we have $18 trillion coming in. Pretty amazing, right? I think Qualcomm would be very impressed if they had even a little piece of that. So we've done a great job. But for whatever reason, and nobody's been able to give me an answer, when you win the presidency, you seem to lose the midterms. Even if you win the presidency by a lot and you do a great job as president. Some presidents have done good, and they've lost. I think it's like 2 times in the last many, many years it's been won. I don't know why. It doesn't make sense. Usually I can figure things out, but I don't know why, but that seems to be. But other than that, we should win because we're doing great. The economy is roaring. I think the economy is only going to go better with all this money pouring in. We have factories being built. And forget about AI. We have AI more than anybody. We're leading AI by a lot. But we have many car companies coming in from Canada, from Mexico. They're coming in from Mexico. They're coming in from Canada, from Japan, from Europe, all over Europe, Germany, all over Europe. We're doing great. But for whatever reason, it doesn't matter how well they're doing, good and bad. The bad you understand, but even when a president is doing well, they seem to not do well in the midterms. So we're going to try and change it. There should be no reason for it. If anybody at the table can figure out, Bruce, a nice psychological reason, but so I want to win, and winning the midterms is important. People want us to win the midterms, and I think we have great spirit. We should win the midterms, yeah.
Under Joe Biden's administration, during COVID specifically, Biden removed the safety standards on abortion drugs. Now I'm hearing from a lot of pro-lifers that they're very anxious because yesterday Bloomberg reported that your FDA is slow-walking a review of the abortion drugs that Secretary Kennedy promised.
Yeah,
How
I don't
soon
know.
do you want to see that?
I'll find out. I'll ask them.
Do you want to see
I don't think they're slow-walking anything, but I'll find out. Yeah.
Mr. President, any update on the clashes between Thailand and Cambodia, sir?
Yeah, I think I'll have to make a phone call. I was going to say that the Thailand and Cambodia, one of the 8 that I settled, they've been fighting for a long time. They've been fighting for a very long time, many, many, many decades. But I got along great with both. I found they were 2 great leaders, 2 great people, and I settled it once. I think I can do it pretty quickly. I think we're scheduling a phone call tomorrow.
Mr. President.
With Thailand.
On the Fed chair.
With Thailand, if you just to answer, Steve, with Thailand and Cambodia, I think I can get them to stop fighting. Who else can do that? Think of it. Settled 8 wars. Every once in a while, one will flame up again, and I have to put out that little flame. I have to put it out, but we're going to put it out again. So I think I'm scheduled to speak to them tomorrow and see if I can. It was unfortunate what happened. I mean, I know exactly what happened. It got it started a little bit, but we'll see if we can put it out.
We're interested in the seizure of this tanker. What happens to the oil on that ship?
Well, we keep it, I guess.
Where does it go? What port does it go to?
Well, you have to follow the tanker. You know, you're a good newsman, just follow the tanker.
Do you know where it was going? Was it going
Follow
to
it,
China?
get a helicopter and follow the tanker.
Is it true it's going to
But we're
Cuba?
gonna, I assume we're gonna keep the oil.
Mr. President, on Fed Chair, Kevin Haskett said you were going to announce your decision within the next 2 weeks. Is that correct?
Maybe.
Are you doing your interviews with finalists today?
Well, I'm meeting with Kevin Warsh today, so I'm meeting with him, and I sort of have a very good idea what I'm looking for. Again, I'm looking for somebody that will be honest with interest rates. That's all. I just want honesty. Our rates should be much lower. Our rates should be the lowest rates in the world. Because all these countries that you see, you know, with low rates, many of them are low because of us, because they suck so much money out of us. But that's not happening anymore. We should have the lowest rates in the world. And without us, none of them really exist as an economy. I mean, I can show you these really prime, really wonderful countries. They've had nothing but success. It's because they took so much out of the United States. I mean, it's one of those little problems. I want to see that when we do well, we're rewarded for doing well, not the way it's been for the last pretty long period of time.
Are you asking for finalists to pledge to lower rates? Are you asking these finalists to pledge to lower rates if they become the chair?
No, I'll be asking questions and I'll be able to figure it out.
Mr. President, we have 3 countries sending drugs to the U.S., Mexico, Venezuela, and Colombia. And you talked to the president of Mexico, you already talked to Nicolas Maduro. Have you considered talking to the president of Colombia, whom you call a drug dealer?
No, I haven't really thought too much about him. He's been fairly hostile to the United States, and I haven't given him a lot of thought. He's going to have himself some big problems if he doesn't wise up. Colombia is producing a lot of drugs. They have cocaine factories that they make cocaine, as you know, and they sell it right into the United States. So he better wise up, or he'll be next. He'll be next too. And I hope he's listening. He's going to be next. Yes.
Mr. President.
Because we don't like people when they kill people. And they sell drugs, they kill them in the United States. And Colombia is a major manufacturer of drugs, meaning cocaine in particular, as you know.
Thank you, Mr. President.
Thank you.
Multiple House Republicans in recent weeks, days, have been critical of Speaker Mike Johnson. I wanted to ask you if you're still confident in the Speaker to keep his conference together ahead of the midterms, and how often are you speaking about him?
I think Mike Johnson is great. You know, he's had a majority of 2, 3, 4, then back to 2. We actually had 1. So we were 1 heart attack away from disaster. So everybody prayed for everybody's health. I think Mike Johnson's been a fantastic speaker. I mean, a very hard job because, you know, when you have a small majority, and we got the biggest bill in the history of our country approved, the Great Big Beautiful Bill. I call it the Great Big Beautiful Bill. There are different names for it, but to me it's a Great Big Beautiful Bill because it gives the biggest tax cuts in history, the biggest regulation cuts in history. No tax on tips, no tax on Social Security, no tax on overtime. I think Mike Johnson's been a great speaker. I think few people could have done that job.
Do you want to see another big package move through Capitol Hill in the next year, or?
Well, we don't need it because we got everything. You know, this was supposed to be 17 bills. And I think it was my idea, but, you know, with the concurrence of people that have done this a long time. And I said, why don't we make it 1 bill? Because it's very hard to get things approved by the Democrats. And it worked out because there was something good for everybody. If we would have done 17 bills, we wouldn't have gotten 1/3 of them approved. It was something great for everybody in the one, you know, the Great Big Beautiful Bill. Brian?
Yes, good to see you, Mr. President.
Hi.
I follow up on the event last night in Pennsylvania. Huge crowd turned
Yeah,
out there.
big crowd.
It seemed like Rally Trump was in prime condition last night. You enjoyed it. Can you just give me your thoughts on that? Then I do have a question on the gold card.
Last night was amazing in Pennsylvania. We had a tremendous crowd. It was like freezing. And the people, the thousands of people on the sidewalk trying to get in or the streets. It was an amazing evening, actually, and I think people really enjoyed it. I enjoyed it. You could tell that.
I can tell that you enjoyed it.
I enjoyed it. I really did. Well, you know, it's easy to enjoy when you do a good job and, you know, when you can talk about things in a very positive way. It's hard not to say it. We have potentially the greatest economic boom in the history of the world. It's being built right now. And when it opens, there will be nothing ever in history like what's happening in our country. And, you know, Washington, D.C. is safe, and Memphis is now. Look at Memphis. Crime is down 60% in Memphis. We just got there 3 weeks ago. And we're going to have New Orleans. New Orleans we just sent a group of people there, and crime is down 28% in about 3 days. You know, we do a good job, you know, and these are central casting people. These people they're very tough people if they have to be. They're very good, they're great patriots, but they are the toughest, and they don't take any nonsense. And every place we go, we knock down crime. Too bad that we're not invited more into Chicago, because we could save Chicago very quickly. But even that, we're doing it on a minimal basis until, you know, at some point we'll just go in and do what we have to do if the governor doesn't wise up. They got a bad governor, they have a bad mayor. I would say they're both incompetent, but it's hard to believe that people don't want to stop crime. We could stop the crime in Chicago in about 2 weeks. Go ahead.
My question is on the gold card. I apologize if I missed the answer to this. Is there a limit to how many gold cards these companies can buy?
Howard?
So the program is part of the already approved visas. So we're just going to have great people come into this country. You know, the average green card holder earned less than the average American. So they were more likely to be on the dole and be on our assistance programs than average Americans. And the idea is from President Trump, he wants to raise it, bring in the best people into America. So same visas, but now just full of the best people.
Basically, it's a green card, but much better, much more powerful, a much stronger path. And a path is a big deal. Have to be great people, but much stronger path. And it also, in addition to that, helps companies, because not only for companies, but if IBM gets somebody #1 in his class at the Wharton School of Finance, and you're dying to get the person, but you can't guarantee the person stays in the country, because oftentimes they'll say, I'm sorry, sir, you got to get out of here, you have 24 hours, right? And you say, where's my employee? Now IBM can buy a card, and that employee can be there for essentially a very long period of time.
Mr. President, could you tell Bruce?
It's so needed for the companies. You know, it's needed for others, but really it's basically a much better form of a green card. And you can't get green cards. They are impossible to get. This is much better than a green card. Yeah.
Yes, so did you tell Bruce Blakeman not to run for governor, or that she should think about not running for governor?
I haven't spoken to, first of all, he's a friend, she's a friend. These are two great people running. In a way, I hate to see them running against each other. I hope they're not going to be damaging each other. But Elisa's fantastic, and Bruce is, they're two fantastic people. And I always hate it when two very good friends of mine are running. And I hope there's not a lot of damage done. Sometimes it works the other way. The victor ends up being much stronger because of it. A lot of times that happens in politics.
You think you'll step in a couple months to actually see who performs?
Well, I think in New York we have a convention toward the end of February, and I think you'll know pretty much at the end of February what's going to happen. And I'll probably have to, you know, do what I want to do. But I hope that he's running now, as you know, and she's running. We have two very talented people. Either one should win against the Democrats.
Mr. President, the President legacy story lately focuses on one of your cabinet members predicting that you're going to fire this one or you're going to get rid of that one. Of all your cabinet members, who would you perceive as the most under attack?
Well, I think my cabinet's fantastic. I read these same stories that I'm unhappy with this one or that one, and I'm not. I think the cabinet's done a great job. I read a story that I was unhappy with Pete because he was attacking drug dealers. I said, that's not exactly right. I would say very much the opposite. Pete Hegseth has been phenomenal. I read a story recently, I'm unhappy with Christie I'm so happy with it. I mean, we have a closed border. We have a border that's the best border in the history of our country. Why would I be unhappy? She's fantastic, actually. No, we have a fantastic cabinet, really fantastic cabinet. I mean, Lutnick I'll have to think about. No,
Can't have everything.
can't have everything. He's doing great. Well, Howard's done really well, and Scott's done really well. We have just a fantastic cabinet. I'll tell you who's doing a great job is Linda McMahon. We're bringing education back to the states where it belongs. Education is going, we can't do any worse than we're doing right now. Let the states run it. You know, if you go back to some of our states that are run so well, so good, I would say 40 of them. And then you'll have trouble with 5, and you'll have bigger trouble with another 5. But you have 35 or 40 states that will run education as good as Norway or Denmark, Sweden. We have some, you know, the heads of the list are Denmark, Norway, Sweden, a few others. I think if you go to Iowa and you go to Indiana and you go to, I can name a lot of states, I think it would be almost the equivalent or maybe better. But you can't run a school system in Iowa from Washington, D.C. Yeah.
Sir, the Gaza plan, when do you expect to announce members of the Board of Peace, the leadership of that?
Well, we'll do it early next year. And the Board of Peace are going to, it'll be one of the most legendary boards ever. Everybody wants to be on it. It's mostly going to be, I guess, you know, we weren't thinking about it that way, but they want to all do it. Basically, it'll be the heads of the most important countries.
Mr. President.
They all want to be on. It wasn't really planned. We thought we were going to get very distinguished people that do that kind of thing for a living. But really, it looks like it's turning out to be, they want to be on. The heads, the kings and the presidents, prime ministers, they all want to be on the Board of Peace.
Mr. President, as a follow-up to last night's rally, can you clarify, you have called the affordability crisis as a Democratic hoax, but you also want to make America affordable again?
No, the word that they use is a hoax, and because they're the ones that caused the problem. I'm talking about when you're trying to say it a different way. Now, it's pretty simple, though, if you listen. It's a hoax where they created the problem. They're the ones that gave the high prices. So when they use the word affordability, they shouldn't be using that word because they're the ones that created this problem. They created the highest inflation in history, and they created the highest prices in history. And now we have to get those things down. But when they go, they look and they say affordability. They never discuss it. They just say the election's about affordability. Well, it may very well be. I think it's also about still the border. You have to remember the job. You know, the sad thing is, for 7 months, we've had no people come through our border. Nobody can even believe it. 0 people. And the people that do that are largely Democrats, which the people that do the stats. We've had no people come in, other than coming in legally. But if you take a look, and nobody wants to talk about that. In fact, last night I said, let me talk about the border. My own people told me, sir, nobody cares about the border anymore. You've fixed the problem. I said, do I get a little credit for fixing a disaster where millions of people a month would flow into our country, and from prisons and from gangs and from drug dealers and mental institutions? They say, sir, you fixed the border. Nobody cares. I say, but I care. It's sad when you fix something and then you can't even use it. You can't talk about it. My own people don't want to talk about it anymore. But very simply, the Democrats created the worst crisis of inflation that this country's ever had. And with that came the highest prices that we've ever had. And I'm fixing it.
Mr. President, has Secretary Hegseth told you why he hasn't released the video of the second strike?
No, he hasn't told me. I thought that issue was dead. You're surprised you bring it up. You must be CNN.
Lawmakers are still
Are you
talking
CNN?
about it on the Hill.
Are you CNN?
I am with CNN.
Oh, gee, I'm shocked to find out.
But lawmakers are still talking about it on the Hill.
Well, I'll tell you, I don't know about lawmakers. Which lawmakers? You're talking about
Most of the
Democrats?
Democrats have been talking about trying to release it.
I mean, the people that you work for, the Democrats? You know you work for the Democrats, don't you? You're basically an arm of the Democrat Party. Thank you very much, everybody. I appreciate it. Thank you. Thank you very much.
Thank you guys.
Come on, you want to talk?
Thank you guys. Turn off the cameras. Thank you guys.
them image and provide into my basis speaking. And feminines, a variety of my basis speaking. Then the diagnose still roams, running on away. But you still wait to those disciples for vision. It is a completely questioning me.
confidence through knowledge.
There was a second. I'll take that one out.
maintenance through now that
there was a sound can. I'll take that out.
maintenance through now that
there was a sound can. I'll take that out.
beides wissen. Let's go not that when you step is crashing.
多少人。
My baby, my love.
What's going on here, man? What's going on?
What's going on with this stock? Let's see over here. What's going on with this stock? Let's go ahead and switch up and see what's going on with this stock. Yeah. Yes.
No, Spy. What are you doing, Spy? Get your butt back over there. Get back up there. Word. What's going on over here? Welcome back. Welcome back. Welcome back. Doggy, 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 doggy. Woogie, doggy, 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 doggy. Let's see what is going on here. Woogie, doggy, 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 doggy. He just popped in and then he just popped out for like that 1 second and that was it. He must be really busy. But let's see, I just noticed that the dollar index has been dropping. Dollar index has been dropping substantially. I don't know, I'm surprised. It's made even lower lows. Let's see, and it climbed back over 136 back in the middle of November. Now it's going back down and making another leg down here. Wouldn't that be concerning, to say the least? Yeah, I would say that'd be the case. The dollar index drops, and then you have the market going the opposite direction, going back up. So let's look at the 5-minute chart. You can see the dollar index here trying to make another leg down too on some crazy stuff, man. Let's see, 7 minutes ago. What did it say before here? U.S. dollar tumbles after Fed cuts rates. That's what it looks like, yeah. Fed lowers the rates, signals pause, and 2026 cut. So, all right. So I'm guessing the next meeting would be a pause, and then the next meeting afterwards will be a cut, probably another 25 basis points cut. So it would be 2.5% instead of 2.75. I mean 3.5. It would be 3.5 instead of 3.75. Unless something happens out of nowhere and he goes on and hikes the rate, which would be crazy. It makes me wonder. It makes me want to ask the question: Has there ever been a time in the stock market in the U.S. economy when the interest rates went back, when there was it's way back down. I don't know if that makes sense, but let's see. Okay. Oh, look at this. So it says here. Yes, it happened. It says yes, it has happened multiple times in U.S. economic history, where the Federal Reserve began cutting interest rates, then reversed course and hiked again. These episodes are usually... Why am I talking like this? These episodes are usually tied to inflation flaring back up, financial instability, or a policy mistake. Again, it has happened multiple times in U.S. economic history where the Federal Reserve began cutting interest rates, then reversed course and hiked again. So then ChatGPT goes on and shows a few major historical examples. So for example, the 1970s stop-go policy, the most famous example, and this is the clearest period where rate cuts were followed by renewed hikes. And what happened? The Fed would raise rates to fight inflation, which would result in the economy becoming weaker. Then the Fed would cut rates to support growth. And then inflation would return and then inflation would return even hotter. So then that would mean that the Fed would hike again. So the key cycles shows us here that between 1969 and 1970, the Fed hiked, then cut, and then hiked again around 1973. And then the next key cycle, between the years of 1974 and 1976, they cut sharply during recession, then inflation re-accelerated, and then Fed reversed and hiked into 1979. So this back and forth is why that period is called stop-go monetary policy. Sounds like some Monopoly game types. Stop-go. So it's also the closest parallel to fears in today's economy. Well said. Because it definitely looks like we're headed into that direction, in my opinion. Number two, the early 1980s, the Volcker era. So Paul Volcker famously crushed inflation with very aggressive swings. So here was the sequence. So in 1980, massive rate hikes resulted in a triggered recession. Then the Fed cut rates to soften recession, and inflation stayed stubborn, which resulted in the Fed hiking again in late 1980 to 1981. This ultimately led to the deep 1981 to 1982 recession, permanently reset inflation. So then the third one was in the mid-1980s, which was insurance cuts, reversed. So the Fed made small cuts around 1986 due to recession fears. When growth reaccelerated, it hiked again in 1987 and 1988. And this wasn't to fight inflation, it was more to prevent overheating. Yes, inflation will be back. Bullish for precious metals and food will continue to go up if this is the case. James is right on that point. And I mean, pretty much we can see that precious metals have been rising, have been surging for quite some time now. for example, silver. My oh my, silver with a tremendous breakout starting around the end of August of this year, where it was at $38, $39. Yeah, and then continued to trend up afterwards and made its new all-time high of 61.94. So we literally just about almost touched $62 an ounce for silver. For gold, it was back on October 20th, 2 months ago, where gold hit a new all-time high record of $4,381.48 an ounce. Right now, currently at $42.30. So the fourth one shows about the 1990s soft landing attempt. So the Fed finished hiking in 1990, which then led to a cut for a recession between 1990 and 1991. The economy rebounded strongly by 1993 to 1994, and then the Fed raised the rates again in 1994. This is one of the few times the Fed engineered a soft landing. Wow. Okay, listen to that. This is one of the few times the Fed engineered a soft landing. This is what ChatGPT is stating here on its responses. So when it didn't happen, once major easing cycles start, they rarely reverse unless inflation or overheating forces it. So examples where rate cuts continued straight downward with no reversal was back from the 2001 recession, the 2007 to 2008 global financial crisis, and the 2020 COVID crisis. In those cases, the deflationary forces were much stronger than inflation. What's up? Welcome back, Johnny. Mr. Juan Rodriguez. Are you heading back home now, or are you just almost about to finish working? So then ChatGPT goes on and says why this matters today. If the Fed cuts too early while inflation is still above target, history shows that the Fed is often forced to pause and then hike again. Now, what is the Fed doing now? What we just saw, what we read in that one article, where'd it go? I was just looking at it now. So what happened? So they cut the rates, but they're signaling a pause in January. So what are the chances of this recurring again and then having to go through a new cycle where they decide that, hey, maybe it's probably best to just hike the rates because I still think the inflation is a bit high or whatever. So what I'm gonna do is I'm gonna take this here and I will be posting this image here and see what it says. But it says here that the Fed is often forced to pause, then hike again. The most relevant historical parallels are, again, the 1970s stop and go, and the 1980 to 1981 Volcker rehike. Both happened because inflation wasn't fully defeated. And as we know that inflation is still far from that target of 2%. And as we know, as we look back, inflation, see if we take a look at where inflation is right now. 1 second. When is the next event? Let's see. Or we can just hold on. Where is inflation at right now today? So the CPI inflation was 3.01%. Food price inflation was 3.11%. So yeah, we're standing at 3% right now. So we're still pretty far from that number, that 2% target. But anything can happen in between that. So, very list. So in summary, ChatGPT, once again, yes, there have been multiple times, most notably in the 1970s, early 1980s, mid 1980s, and early 1990s, all share a common pattern. That common pattern was that inflation wasn't fully under control, which had resulted in the Fed cutting too soon, and then inflation came back, which resulted in the Fed hiking again. So I'm gonna then go ahead and post this image and then ask, based on the fact that today's inflation is at 3%. The rates and the interest rates are now at 3.75%. What are the odds of a new cycle happening where they decide to pause next Fed meeting, but then out of nowhere they hike the rates as how they did with the as how they did historically. Let me see what it says here. Maybe I didn't really form that question properly, but let's see. So it says here that so the clean, real, historically grounded answer no hype, just probability, Fed behavior, and what the current setup implies. Short answer, yes, the odds of a pause followed by a surprise hike are real, but they are not high. Realistically, estimated probability of a cut to pause to hike reversal in 2026, according to ChatGPT, is stating here a 20 to 30% chance. Non-zero, but not the base case. This scenario becomes more likely if inflation reaccelerates above 3.5 to 4.0%, or if wage growth or commodities spike. Let's see. Okay. Take this. Why the probability is not zero. So you've just identified a classic stop go setup. Wow, listen to this. So inflation at 3%. The Fed funds at 3.75%. This means a real interest rate of plus 0.75%, which states here that it's positive, but barely. In history, every time real rates fell to plus 0.5% or lower while inflation stayed sticky, the Fed eventually reversed course and hiked again. And this happened in, again, 1970 to 1974, 1976 to 1980, 1986, and 1994. So what the Fed said today in the Reuters screenshot mentioned in key parts that the Fed cut rates. Powell says rate hike not base case. Fed sees one cut in 2026. Now, we don't even know when that cut is going to be, because 2026 is one whole new year. And out of all of the Fed meetings that will take place in 2026, they have not stated when that cut is going to be. But expect the unexpected, in my opinion. I wouldn't be surprised if everything aligned with all of the other things that are happening within the economy, and as a result, that would have to be resulting in that base case and hiking the rates, like it happened historically. So Fed sees one cut in 2026. Futures still expects 2 cuts. So there's one cut for now in 2026, but futures still expect 2 cuts. The interpretation is that the Fed does not, italicized here, does not want to hike again, but ... There's always a but. Therefore, the confidence isn't 100%. But they left the door open by saying it's not the base case. So that means it's not off the table. So in Fed speak, that's meaningful. There's always a way that specific people word things. In that case, Jerome Powell. So that's why when it comes to things like that, and that goes also for articles posted and any type of statements, any press releases or earnings calls, whatever scenario you can think of, there's always a meaning to what people say. So if we take this as an example, you know that people will be scrambling to find out the exact meaning of why it's not the base case, but meaning that it's not off the table. So there is a slight, and that slight chance is probably like a 1%. But maybe down the road, if things start to get a little crazy and a little bit concerning, that percentage would probably, in my opinion, start to gradually grow, and fear would continue to ensue throughout the whole markets. Therefore, who knows if the scenario would be that what we're talking about right now. So what would force a surprise hike? So there are 4 specific triggers that historically cause reversals. Number 1, inflation reaccelerates, likely if energy spikes. If CPI goes from 3.0 to 3.3%, then there's no panic. But if for some reason CPI data comes out and that 3.0% turns to 3.6 to 4.0%, that's gonna equal to panic territory, or that's gonna put the US economy in panic territory. So then a hike becomes probable, not just possible. Number 2, the labor market refuses to cool. If unemployment stays below 4% and wage growth stays above 4.5, and then that's when the Fed gets boxed in. Let's see, what is the current unemployment rate? So right now, currently, updated since September 2025, it's at 4.4%. Again, CPI, where is it? Oh no. Again, if unemployment stays below 4%, and if wage growth stays above 4.5%, then the labor market refuses to cool down. Again, since September 2025, we've been at 4.4%. So then, number 3, financial conditions loosen too much, which would result in stocks mooning and then credit spreads shrinking. So if the markets rally too hard, the Fed sometimes hikes to prevent overheating. So I wonder if maybe if the Santa rally would occur, and I don't know, they throw out an article or something happens between this time frame between now and then the next Fed meeting. If it so happens that something causes the markets to rally crazy, and then it gets to a point where that there's a lot of money printing, a lot of stocks blowing up left and right, and then that's where the Fed would step in and then have to do what they got to do. And speaking of the dollar index, number 4. Oh, and mind you, that happened in 1994. All right, so markets went crazy. Fed had to step in to hike the rates to prevent overheating. But number 4, that article that I posted states, it mentions that the US dollar tumbles. So 2 weeks of a dollar equals imported inflation rising. So this increases the odds of a future hike. Somehow other countries would benefit from a weaker dollar in terms of imports. So that could be the case scenario. So the current odds, based on the 3% inflation, the 3.75% Fed funds, the Powell not ruling hikes out, futures expecting cuts, maybe market being too dovish, the dollar dropping, and historical patterns. And the realistic odds, which states here not alarmist, 70 to 80% equals no more hikes, which would probably be the base case, or 20 to 30% equaling to a surprise hike cycle, which would also be called a stop-go light. So this will be a light version of the stop-go cycle, which, again, exactly how reversals began in 1976, 1987, and 1994. So what would increase the odds above 50% if any of these happen? Either, as a matter of fact, what if they all happened, where CPI goes back to 3.4 to 3.6%, oil jumping above $100 per barrel? I mean, that would need to result, that would need to be tied to some type of event, or maybe tensions in between two countries. I mean, we are seeing things unfold in Venezuela, and I did notice that I think I posted on Discord earlier, but it did show that the U.S. forces earlier today seized an oil tanker off the coast of Venezuela, as you can see right here. This was a video that was posted on X or Twitter. And yeah, so things like this. Tankers. So I'm gonna be able to, let's see, hold on. Copy this text here. Let's see if I can actually get on here and show the exact video. U.S. forces here seizing an oil tanker in Venezuela. That's insane. They went in hard. This looks like a footage from Call of Duty or something. Doesn't that look like a trailer for like a Call of Duty game? That's insane. But give me 1 second here. Oh. Okay. I'm gonna okay. So just close this right here. So then, I mean, for some reason, oil has been active. The price of crude oil has been active since earlier this morning. It was at 57.65 per barrel, and it had reached about maybe 59 and change. So slowly trying to creep up again. Price action here. So I don't know if this will continue or this will probably hold for a bit. But you can see a couple of stocks there was in the green today, including BP. What is this? Equinor, ASA, Shell, Sunoco, ExxonMobil, Chevron, ConocoPhillips. Halliburton was up to 1.61%, and Halliburton has been climbing for some time since the end of November, about mid-November, just under $25, and now climbing over $29. We have SLB, which looks a lot more stronger here. It was under 35, now it's at 40. Oxy looks like it has hit another bottom. You can see here on the 1 hour chart, there was a couple of bottoms somewhere around the beginning of November, then close to the end of November, then here just a few days ago. So triple bottoms there happening, or I don't know. So that has been happening. That's been going on. So maybe this is a good area here of entry, in my opinion. What was this about? Okay. As a matter of fact, 34.78, the last 52-week low. Yeah, so that could be the next bottom there for Oxy. Patterson, UTI, doing the same exact thing there. It closed at 646, up 2.22%. Plains All American Pipeline, climbing back up too. Enphase, almost 4%. Small tiny gap there to $34. Fuel cell. Interesting. That's an interesting setup there. And we had our smaller oil plays like Indo. Indo has been active. It's been quite active in volume in the past couple of trading days since the beginning of December, and also had reached a high of $3.10 today. So I'm carefully keeping an eye on INDO. Let's see. So going back to this list here on what would increase the odds above 50% of a reversal leading into a rate hike after a pause. The wage growth would have to be under 4.5%, and then unemployment would have to be, oh no, yes, okay, wait. Unemployment would have to be above 4% again, and the dollar would have to fall another 5 to 7%. So that means the dollar, and it looks nasty too. This pattern is crazy. That means if you're talking about a 5 to 7%, we're talking about the dollar probably being back to 90. And so the last time the dollar index hit a low of 90 was back in I want to say it was back in January. Wow, January of 2021. And that was around COVID time. The COVID crisis. So you already know how the economy was around that time. So the dollar index was around 89 and 90. So and then before that, it was back around the 2018. Was it the housing market or was it mortgage crisis? I forgot what it was. But it definitely looks like. I mean, it looks like there is a possibility of another event down the road. Right, Fishy? Let's have a conversation. So I'm just thinking maybe, just maybe, we could have another drop on the dollar index, which would be insane. Which would then increase the odds above 50%, and then a hike becomes the new base case. So all of this listed here would have to result in a interest rate hike, and that could, that could take a couple of months. So the final answer, clear and honest, there is a meaningful 20 to 30% chance that the Fed pauses the next meeting and then later reverses into a surprise rate hike because real rates are barely positive. Inflation is still at 3% and the dollar is weakening. So ChatGPT says it's not the most likely path, but history shows that this setup can flip quickly. So I'm gonna say something here. Speaking of oil, jumping to $100, and I'm gonna put here currently. What is it? Currently 58.78. Currently 58.78. WTI currently 57.8 with tensions arising in Venezuela. And today, U.S. And then today, U.S. forces seized a oil tanker off the coast of Venezuela. How would this play a role in the price of crude oil? Word. What is that? QVO? What is QVO? Is that a ticker? What is this? Third quarter all season active rotation ETF. Metelo en el cuarto. Wait, Fishy, is that a ticker? Because I'm not seeing that. Uy.
No era de dormir todavía, ¿ok? No es
No,
hora de dormir. Que lo sepan. Así que...
Word. So, a U.S. seizure of an oil tanker off the coast of Venezuela is a high-impact geopolitical event, and it absolutely has the potential to push crude oil much higher. Supposedly. Here, ChatGPT stating this in its opinion, not financial advice. Especially because of how fragile the current global oil balance is. Oh, that's Mexican slang. I don't know. When I looked at QVO, I thought about Cuervo, Jose Cuervo, but that's with a C. Why am I thinking about tequila? What the hell? Now, why a U.S. seizure of a Venezuelan tanker matters. This isn't just one tanker being stopped. All right, y'all? It signals something far bigger. It means U.S.-Venezuela tensions are escalating, and any escalation puts all Venezuelan exports at risk, and not just one ship. What is that? My mom is taking honey to my room. This is being too loud. So So anyway, hold on. Let me put on. Hold on. Where's the spy at? Pretty bird, pretty bird, pretty bird. That's a pretty bird. That's a good pretty bird. Yo, so it means U.S.-Venezuela tensions are escalating, and any escalation puts all Venezuelan exports at risk, not just one ship. It raises the probability of sanctions snapping back. So if Washington reinstates the heavy sanctions from 2020 to 2022, Venezuelan supply to the global market could drop by negative 500,000 to negative 700,000 barrels per day. And that's a huge loss in a tight market. Risk premium returns. So oil markets add $5 to $20 per barrel immediately when geopolitical risk rises. And as you already know, we've discussed this situation with crude oil surging, you know, with all of the geopolitical tensions that happened in the past couple of years. So for example, this happened with the Iran tanker seizures, the Yemen Houthi Red Sea attacks, and then the Russian-Ukraine pipeline disruptions. Venezuela is no different. Number two, why Venezuela matters to global oil supply. Venezuela contributes currently 800,000 to 900,000 barrels per day after recovering from sanctions. So if tensions escalate, shipping routes may be blocked, insurance premiums spike, some buyers avoid Venezuelan cargo, and exports can drop overnight. Even a loss of 200 to 300,000 barrels per day moves the market significantly. So this is just predictions here being made by ChatGPT, and as you can tell, and as we always know, that ChatGPT can make mistakes. And this is not financial advice, but do your own research. And you know, we've already talked about a lot on oil and all the stocks that we've gone over in the past. So you should have the list set in your in your apps. So anyways, impact on crude oil price, which is currently at almost $59, $58.78. At WTI in the high 50s, the market is not pricing in geopolitical risk. Tanker seizures start to change that equation. Probable price effects. So here is the prediction that ChatGPT is throwing out here, is that in the short term, between 1 to 2 weeks, plus $3 to plus $7 per barrel, WTI moves into the $62 to $66 range, simply due to risk premium buying plus short covering. So we take a look at crude oil. Let's see, maybe the hourly. Does that make sense? Where do we see 62? Let's go to the daily, actually. Yeah, let's go to the daily chart. 62. 62 would be somewhere around here. So here. So that's one target. And then 62 to 66. 66 would be here. Not accurately, but I just move it up a little tiny bit here. So that would be the next resistance. I'll put an alert there. Then medium term, 1 to 2 months, if more seizures, sanctions, or threats occur, that would be a $10 to $20 increase per barrel, which then WTI pushes into the $70 to $78 zone. I mean, these are just like very interesting price targets here. As you can tell, this is where some of these levels have ended up in the past. Like, for example, here back in July 30th, where crude oil was at $70.51 per barrel. And then, once again, around mid-June, which led to a spike up to $78.40. And then again back here around April and end of February. So I've touched that level so many times in the past here. So then, what if this happens again? Extreme scenario, I mean, the odds of this happening, I feel like it's slight to none, but bless you. But if this were to, extreme scenario would be the sanctions being restored or military involvement, which would add $25 to $40 per barrel, which then WTI easily hits $90 to $100 per barrel. And this would match the price reaction seen when the US killed Soleimani in 2020, when Russia invaded Ukraine in 2022, and Yemen Houthi attacks began in Iran. Markets reprice risk instantly when oil choke points are threatened. Now, why oil can spike from a low base? Oil at $58 means demand expectations are weak, recession odds are priced in, no geopolitical risk is priced in, and the market is heavily shorted. This is exactly when geopolitical sparks create the strongest upside shocks. A single tanker, as you can see right here, on what happened earlier today off the coast of Venezuela, a single tank seizure can trigger short covering, CTAs, algorithmic trend funds, flipping positions, energy equities spiking, and options volatility exploding. This is why oil moves violently from the lows. What's up, Chris? Chris with a mother K. How's it going, man? Welcome back. Welcome back to a random, rare evening edition of the stream. How has December treated you so far? And are you ready for the holidays? Are you ready for Christmas? What are your plans? How you been? As I explained, number 5, which is the bottom line, the direct answer, a U.S. seizure of a Venezuelan oil tanker. Go, check it over, let's go, Roger, go, Alpha, Roger, Beta, Gamma, blah, 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 blah. Check the oil, this is our oil now, bitch. And then, so, give me 1 second. So that means that a seizure of the Venezuelan oil tanker increases geopolitical risk, raises the probability of sanctions or further conflict, reducing available supply and adding an immediate risk premium to crude oil. Even one tanker seizure can lift the WTI by several dollars, and a broader conflict could send oil into the $80 to $100 range. If tensions escalate WTI at $58 is extremely mispriced. Which small caps explode on Venezuela? You know what? I want to see. I'm curious on what ChatGPT has to say about this one. Which small caps explode on Venezuelan disruption? Accumulating still, brother. Not bad. Sticking with my game plan. Word. What is? Wait, are you still accumulating on Plug? GME? What's the game plan? Oh, 14 months. Wow. Wow. Chris, officially a member of the Lion's Den for 14 months with another level 1 from the number 1, the biggest whale in the Lion's Den. Thank you for always supporting and showing the love. Chris with that mother button K. Johnny is on his way home now. Let us know when you get home safe. And your honey better give you some nice back rubs. Give you a nice rub down. My man Johnny working so hard. This is interesting. Let's It's funny that you say that, because I'm eating tuna right now, so it's kind of fishy in my mouth. So I don't know if this is hold on. Pause. I didn't mean to say it like that. I promise she wasn't swimming in the Hudson River. Oh, that's so bad. Why is that? It's like it's not even sweet. Oh gosh. That plantain is not, no, not at all. Nope. Oh my gosh. Say word. Zelly has been gifted by the big, great, giant whale, Chris. What the mother K? Triple H, 1521, gifted. Torch, the man with the big torch, with a flamethrower, Kai Supreme 2.01, gifted. Ape Nation Notations? Ape Nation Notations gifted by Chris. And damn, hold on. Thank you, dude. Okay, yeah. So, oh, and Manuel Regas. I don't even say that. But yeah, let me see. Zaddy of all zoodles. But yeah, thank you, Chris. We can all be spamming, but we can all be spamming the rockets. But I haven't seen Zelly in a while. I haven't seen Kai Supreme either in a while. Oh, really? Talking about the legends. Where's Mr. G? He was on earlier. Zelly was with the DZ in the morning. Okay. Yeah, I wasn't on in the morning. So I just decided to come on later, right before the Fed meeting, and stream the reaction on the markets. I'm ready to sell. No cap. You're ready to sell what? What are you talking about? I'm accumulating crypto, brother. If anything happens to crypto later on, which I'm sure it also has to go through a cycle. I'm sure everything goes through a cycle eventually. If it did happen, then this time I would be ready to get into some crypto. Officially. Like officially get into crypto. Because I can't miss out this time. I cannot miss out this time, man. I've already missed out on XRP from 30 cents. But anyway, yeah. That's love, though. Again, thank you, Chris. You already know since day one, man. You're ready to sell everything? What you mean? What is everything? Fishy, what are you talking about? What happened? Alright, so check this out, right? Now, I don't know. I don't know what's up this time, but I'm just here closely looking at crude. And knowing that this is happening, I'm just surprised because you already know how ChatGPT does. And there has been some tickers that ChatGPT had mentioned in the past before when we used to do our research. And especially I remember the quantum computing plays and LBTR and Oklo, those other tickers that eventually blew up. As in today's. So I wouldn't be surprised if one of these plays here that are listed that I'm about to go over also moves up and you know, goes crazy if crude oil decides to go crazy. GTE is Gran Tierra Energy. It's a $4.68 stock. Well, actually dropped a bit here. It dropped down. Wow, it did a little nosedive action here from 468 to 446. It says here 6 days ago, REG, Director PDMR shareholding. Notification of transactions in the company's shares by directors and persons discharging managerial responsibility. Company announces the following transactions in the company's common shares undertaken by directors, persons discharging managerial responsibilities. Okay. Details of the issuer, emission, allowance, market participant, auction platform, auctioneer, or auction monitor. Interesting. Acquisition of common shares through the company's employee share savings plan. Okay. Whatever that means. Go to the daily on this one. Oh, okay. It's been... Wow. There was a split back in May 5th of 2023. 1 for 15. Hasn't been long since then. But it looks like it's kind of, sort of bottoming a little bit here. But anyways, for this particular stock or company, it's a South America pure play. This cycle is different. There was almost no institutional involvement. Yeah, Chris, and then all of a sudden, now it's like full institutional involvement. Like they just decided to flip the switch and be like, you know what? Now let's just all integrate into our banking system, yada yada, and now everybody's for crypto and the big banks. But you still got your shorts. Let's see. So, GTE, the South America pure play. Why does it spike? Because it produces in Colombia and Ecuador, both geographically tied to Venezuelan disruption. So if Venezuelan supply drops, Colombian barrels become more valuable. Market cap small, floats light, options liquid. Okay. Let's look at that real quick. Looks like the SPY, by the way, slowly on a decline from the reaction to the Fed announcement of that 25 basis points cut to 3.75. I wonder if it will continue or will actually eventually bottom and go for another recovery bounce. But let's quickly check out GTE. There are options available, but there is no volume or activity except for February 20th, 2026. There's some volume there, but the spread is too wide. May 15, 2026. For the $5 strike, I guess there is some activity there. Maybe I think something is bound to happen. I don't know. But it does look like it. Honestly, it does look like it's bottoming out from here. And on top of that, the 50-day period moving average looks like it's slowly on an uptrend. And maybe by the end of this month, we'll probably see, if it continues going the way it is, it could very much lead into a golden cross. Maybe somewhere around $4.80 to $5 a share for GTE. Let's see. So if so historical moves, 50 to 120+% moves during LATAM disruptions, and then the big 2024 spike when Venezuelan sanctions talk returned. Oh, okay. So we'll take a look at that. Let's see, 2024. So I'm guessing this is the spike that was talked about. I wouldn't necessarily say the spike, but this is a big move from January 2024, right around the same price that's actually at right now. So look at that. So this area has been very favorable for bounces. So I'm actually surprised to see that back around those 2024 levels. So back towards the end of January 2024, going from 480 all the way to as high as $10.40 back in June of last year. Let's see, Fishy says my son's birthday is on the 185th? Or are you talking or do you mean the 18th? I think Fishy meant to say the 18th of December. Okay, so the 18th. But you gotta be realistic though, because we never know what could happen the day of tomorrow. We could hope. We could hope as much as we want. We could try to manifest. But you know, it's not all peaches and cream in the market, so we can't expect for something to happen unless there's some type of unexpected event, like I said, or some type of catalyst. If you're playing too close into the expirations, but you're at a good strike, it's nothing. There's no wrong in rolling out those contracts for a further dated expiration, in my opinion. And if you're talking about GME, let me tell you something. Give me 1 second. Let's look at GME real quick. Take a look at GME real quick. What on earth is this? I'm trying to get rid of all my stocks too and just buy crypto only. Could do that. I wonder why this never happened. Instead, it turned the opposite direction. It's crazy. I gotta go to another layout here. It's not the one I want. I think it's this one. Mm-hmm. So, okay, so look. Yeah, remember? Wait, Fisher, you had wow, 1,100 holding calls. Sheesh. Listen, the other week, or was it last month, when I lost 3K, pretty much almost everything, because of the SPY, and I got completely cooked. So I feel for you. It's one of the worst feelings ever. This is the reason why I just don't. This is the reason why I don't play earnings at all. I just don't. And if that was the case, and we knew that in the history, like historically, there were many earnings that were misses, and the stock ended up dropping all the time. But what I am curious is, because I eventually did this in the beginning of this week. I don't know if you guys remembered, but I was home here doing this the other night while I was on stream, and then I did this. Remember, this is all hypothetical. Take it with a grain of salt, but excuse me. But I literally drew out this inverse head and shoulders. Oh, I think it'll look better on the 4 hour, maybe on the 4 hour chart. And then I had drew out these arrows as I posted on, I posted on Discord. So there was gonna be a scenario whether it would drop during earnings and then it would end up coming down around this area, or at the 0.236 fib, 2138. It ended up dropping at 2140. Go figure. And then the bounce happened. Now, in some ways, it's still, to me, in my opinion, it still resembles that inverse head and shoulders, because even though we really wanted it to spike up and run up, it's technically still playing that pattern. So you got like we've seen before, like we've looked at the shoulder here, we looked at the head down here, and then now we're kind of seeing that other shoulder kind of, coming to fruition in some way. And so I feel like it's not really a bad thing, because now we're falling into this territory. Then hit the 0.236 fib at 2138, which literally hit 2140, and then printed. I want to say printed 2 green candles on the 4 hour chart. So low key, this is still promising. And we have yet, excuse me, sorry. I'm here just literally shoving my face while I'm talking, sorry. I was really hungry. So yeah, just like James said, in some ways it still looks intact. And on top of that, you sort of hit a support from here, because we had this bounce previously. If you can remember, here at the beginning of December, it was trading at around 2260, 2270, almost 23, and then it had dropped from 2270 all the way down to 2240. No, to 21. Sorry, from 2270 to 2174, and then bouncing back up, and then ending up hitting 2301, and then consolidating from there. So technically, this was support. This looks complicated, but yeah, still looks intact. It did recover eventually. It did bottom out from here. So this was, in my opinion, this was your buy the dip opportunity right here. This was your buy the dip opportunity right there. This is dark. What is this? Hold on. Dark there. I wish I could type in there, but I can't. So what we need to see for GME, because this is all but like just a reaction for earnings. It would need to, when it comes to the 4-hour chart, it would need to retest that the 50-day period SMA, which shows at 2226. Let me take a look at GME. Where's Jimmy at? So right now it's at 2201. So somehow it's, even through this barcode, for some reason, after overnight session started about 4 minutes ago, it dropped down to 2201. But I'm sure it's probably gonna fall back into this range of barcoding. I know I'm taking chump change at this point, but I'm running out of time. I feel you, man, when it comes to, your boy's 18th birthday. That's a big number. That's a intricate number, special number. Becoming a young adult, After 19, that's it. There's no teens. It's just adulthood. And you gotta make it special for him, So I feel that. So let's just look quickly and see what's Fintel showing. I am a human. Thank you. Do y'all remember the let me see, 16.33% short interest percentage of the float. Short interest ratio 10.38 days to cover. Huh? I wonder if this is just an error. 11 hours ago reporting no short shares available. but then jumping back to 5,400,000. Interesting. I really don't. I wish I knew what that meant. But even that, sometimes even like it's like I don't even want to look at that, because like what is it to us, you know, looking at those numbers, and especially the max pain, you know what I'm saying? Like $20. Hilarious. Let's see. We'll all eventually do better. Seriously. We all gotta do better. And we all gotta, you know, manage our risks a lot better too. Any little move like that, you know, and especially like based on what we're playing, it could literally affect the value. And we've been over this so many times, like you have no idea. And that's why, like, when it comes to playing options and playing earnings, that we've known before, like how it would do historically. I personally just wouldn't play earnings at all. I would just wait to see what the reaction is gonna be, the result, where it's gonna go. If it drops more, wait for a bottom, and then from there, play on the recovery, because that would have been the strategy right there. Mind you, again, from 23.50, right, dropping all the way to as low as 21.40 when the market was open, you know, early this morning. From 21.50, even a slight move up from where this was, from 21.50. Give me 1 second. So yeah, from 21.50 on his big pop and getting you know, something like a what we got here. I'll give you an example. I'm gonna give you an example of a safe play right there. Look, we got GME just popping up. See, there's that little thing that always happens when it drops and then it pops back up. 22.21. But anyways, for example, right? That entry at 21.50 at market open, even though you see the volatility happen as soon as market opens. Where is it? Right here. Show you right here. 9:30, right? At 9:30, boom, drops to 21.50, the low. Then starts to head right back up. Swing $22 calls, and in just a matter of 10 minutes, this thing hits 22.47 before the rejection, and then drops back down. God, I mean, even that would have made, you know, a couple of $100 in theoretically speaking. But in that case, we would have been able to play further out in expiration. So it would be $22 strike calls for December 19th. And we take a look at the charts for this exact call option. You can see that contracts were worth, hold on. Contracts were worth about, give me 1 second. 65 cents? What is this? and then to a high of 105, 107. So that's a slight difference in profit. Although I do notice a big gap. As you all know, there's that gap. Technically speaking, let's see where that gap is right there. Where is that gap? Where's that gap? Trying to look for that gap. I can't even see it. But somehow there was a gap between 22.50 and 23.20. So if they're gonna, let's say theoretically, if they're gonna recover the stock, then it would need for GME to, let's see, this tough. It's tough. It's tough trying to figure this out. C22 was at 22.45. 22.50 would be the next target. And then if you're gonna play options long, then the best bet, I mean, honestly, it would be January, and you would have to honestly get it out to the next strike, which is $23 a share. Do-do-dum. In Peacock. So eventually this would all have to recover. If there is supposedly this gap around here, that it would need to break the 0.236 at 22.65, and then $23. Let's just call $23 the goal price target for this week. By the end of this week, Friday the 12th. But if we fail to see that and it rejects 22, then that means that we could be seeing GME fall back right into this support area at around 2150 to 2170-ish, around that range. And then the 0.618 at 2126, the 0.65 fib at 2114, if that means anything. Man, this is complicated. This is complicated, bro. What? Let's see. According to this was actually coming down to Cracker Barrel. Cracker Barrel had earnings, and guess what happened to that one? You remember Joker was the one that brought Cracker Barrel to our attention. and he actually wanted Cracker Barrel to come down so he can buy it for cheaper. And they had missed. Look, I had it posted here. Where is it? Was it charting? Yeah. Yeah, here. See, this was the image right here from earnings after market close yesterday. So you had GME, which they had beat the earnings per share but missed on revenue, and then Cracker Barrel doing the same exact thing at the same time, beating earnings per share but missing revenue. And it had reached a low right around maybe $23 per share on that drop of the earnings reaction. But Cracker Barrel ended up recovering crazy. This literally came back from $22.99 to as high as $28.38. And so I'm like, wow. Like this literally, this was the recovery that GME should have seen, that should have gone through, you know? This is a real good recovery from that reaction to earnings yesterday. So either that or this is probably gonna move Cracker Barrel into the right direction. Cause like, come on, man, like that's crazy. Oh yeah. Look at this swing. This thing is swinging. On the hourly. Oh, Gary. I see Gary. Gary with the eggplants. How you doing, Gary? So let me see. Let me look up Cracker Barrel. CBRL. With vector setup, bullish engulfing candle, 3 to 5 times RVOL after earnings. Volume shelf just below. Wedge breakout is holding. What is this supposed to be on the daily? Okay. Wow, so you're damn, so Cracker Barrel had billions too, huh? Alright, so let's look at this real quick. Let's look at this real quick. So at some point September from here. Let's go magnet this stuff here. Oh, from this? Ah, wow. Yo, hold on, because all of this is messy as hell. Give me 1 second. I need to switch this. I can't do this. Hold on. I need a clean. I need something more cleaner than this. You know what? No. Let's do. We'll We'll do this one. We'll do this one. Wait, what is this? Runtime, the number of studies for your subscription? What are you talking about? Oh, that's why. Cause I can't. I'm here adding all these. I'm adding all these. No wonder, man. No wonder. All right, whatever. I'm trying to figure out right now. Let me see. I might as well just use this one. Fuck it. Alright, Cracker Barrel. Cracker Barrel. Crack my barrel. Beach. And they pay dividends too. I didn't know that. I forgot. That's 25 cents every quarter. They must be going AI for a fact. For a fact. For a fact. Yeah. Dun, 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 dun. Dun, 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 dun. Dun, 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 dun. It looks like this was the end of the wedge. Apparently, this is the end of the wedge. Let me stop it right here. Take off magnet and then drag it. I need these lines thicker. You want me the thicker lines like that? Maybe yellow. Maybe yellow. Okay, nah. I don't know what color. What color? Green? No, this is too. Maybe this color. Shit, I don't even know. Balls. All right. So there was a big decline, and it looks like here decided to come out of the wedgie that you see there, and then crack a barrel. Crack my what? So this ended up bottoming. You see this huge bounce from 25 to 28.38. Yeah. And now you're gonna see this big recovery. You know what I'm saying, bitch? And then from here. Let me see. I gotta. Yo, I like this. I like this. Let me do this. So now, what Jimmy Awards? They actually had awards? There's no way. That's hilarious. Okay. 4. Oh yeah. Look at that. This is literally gonna climb right back over the 50 SMA. Let me look at Cracker Barrel on okay. Wow, 28.38. Oh my goodness. Cracker Barrel, man. You have some volume coming in for the $30 strike. Slightly, not so much. Big volume here for the $40 strike. Contracts expiring March 20th, 2026. That's random. That's a random strike to go all in volume. The spread is pretty wide too. June, nothing. January, slightly nothing. December, slightly nothing. January, slightly nothing. So I'm guessing the most active one is March 20th. $40 strike though. Can we definitely see a big recovery for Cracker Barrel like that? That would be wild. And then Jimmy goes to the eggplant moon. Apparently, so there is a 50% potential for this to recover back to $30 a share, but it wouldn't really just happen in one day, right? It would take probably maybe a week or two. Predicting here, this is just being hypothetical, predicting that the fact that they quickly recovered from the reaction of their earnings yesterday from $22.99 to as high as $28.38, here closing at $27.95 in the green. That would only lead me to believe that all of these SMAs here would start to cross back over. Bullish divergence. I mean convergence. Cross over the 50 here on the 4-hour chart, and then end up breaking back over 29. As soon as you know it, they'll probably have a lot of investors here buying the dip and eventually pushing this back over 30. So that is the next, I would say that would be the next resistance, in my opinion. Resistance right here. Yes. Bling 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 bling. And by the way, if you didn't see, Cracker Barrel's short interest percentage of the float is at 24.14%. 2.15 days to cover, which is lower than what it was before, I believe. Also, with 20,000 short shares available reported 4 hours ago. And cost to borrow actually bumped up a bit here from 1.73% to 2.73%. Something's going on. I have a feeling. So, sorry guys, I have a spinning wheel. A spinning wheel on your mouse. I don't think there's any Cracker Barrels in California. I think they are. Hold on. Cracker Barrel. Cracker Barrel. Yeah, you have, there's a few. Jeez, there's only, there's a few here. One near Sacramento, one in Rialto, California, another one in Camarillo, California, and one in Rockland, California. Then you got one in Bakersfield, California, and then another one in Victorville, California. Those are the only ones in California alone. That is not a lot. I think Fishy is more closer to the one in Rialto, California. Right, Fishy? GME award ceremony is going on right now on X. I did not honestly, I did not even know that X had a awards ceremony or whatever. GameStop, let me see. The GameStop awards is really, this is it? I didn't know I was gonna get tongued by Ryan Cohen tonight. If Weave Nut doesn't get a thumbs up, I'm gonna riot. In Let's Go, RK. Do we win most nostalgic? Make gaming great again. If this is how the stream starts, I'm gonna lose my shit. Sure. I thought we were watching. I didn't even know this was going on, honestly. I think it happened already. It just stopped 3 minutes ago. It ran for an hour. We just missed it, man. Sorry, I was yawning. I don't even know what happened. I can't even like fast forward. Please go boom, we're going to the moon. Where's Roaring Kitty? Jeez. If you I gotta let me see. I gotta figure out my login situation here for Twitter. Excuse me. Let me give me 1 second. Let me try to log in here. Let me try to log in. So, I gotta find my passwords here. Dun 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 dun. Twitter, 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 Twitter. Is that really it though? It might not be it, but. Okay, that's not it either. What is my password? Okay, that's not my password. Oh, okay, wait, I think I found it. Alright, I found it. Alright, I gotta... Okay, okay, I'm officially logged in. I'm officially logged in. Okay, here we go. I think it's okay to play it. I think it's okay to play it, right? Let me see. That's me on Facebook. Don't know my login and I don't care. Alright, let's see. Hold on. Press and hold the video to skip ahead. Oh, okay. I could just skip the whole thing. Alright, hold on. Alright, here it is, right here. That might be copyrighted music. Okay. Please wait. Alright, what is this?
If these walls could talk, huh? Hi, my name is Scott Wozniak. I've stepped foot in a GameStop 2 times in the past 3 years. This is one of those times.
2 times in the
GameStop
next 3
represents
years?
everything
Jeez.
that makes video
What are you
games so
doing?
exhilarating, extravagant, and expensive. And we're here tonight to celebrate this past year in gaming. The Nintendo tell by the angry mob outside, Sony listened to feedback concerning the PlayStation 5 Pro's price and change.
Hold on. Give me 1 second.
GameStop represents everything that makes video games so exhilarating, extravagant, and expensive. And we're here tonight to celebrate this past year in gaming. The Nintendo tell by the angry
Boycott Switch 2. Hi, Mom.
Mom?
Drop the price.
Side, Sony listened to feedback concerning the PlayStation 5 Pro's price and changed it. It is now
He's looking at Pokemon.
$750. Xbox gave up, and apparently Funko isn't sure if it'll stay afloat into next year. Oh no. What'll GameStop sell now? And folks, this year, we're celebrating some incredible milestones, as today is the 8-day anniversary of Assassin's Creed Shadows on Nintendo Switch 2. And only at GameStop are you truly surrounded by other folks who care about this stuff as much as you do. Yeah, that's right. Can't do this shit at Walgreens. Tonight, we're not only celebrating gaming, but the community that makes GameStop, GameStop.
What do you mean a $6 trading credit? That is ridiculous!
This is the GameStop Awards. Now introducing our first presenter.
I can't believe
My
this
name is Topher A. You may have seen some of my videos on platforms like YouTube, Instagram, TikTok, or maybe even Facebook, depending on how old you are. But today, I am here to present to you the category of Best Video Game Comeback of 2025. Now, we have 4 nominations in this category, but we can only choose one winner. Now, let's take a look at the 4 nominees in today's category. First up is Metal Gear Solid Snake Eater Delta. Metal Gear Solid is one of my favorite video game franchises of all time. And I personally never doubted we would ever see a return to form for Metal Gear, especially without the creator. But here we are in 2025 with a remake of Metal Gear Solid 3 Snake Eater in the form of Metal Gear Solid Snake Eater Delta, which was
remake.
Fantastic.
Wow, really?
And the second nominee in this category is Elder Scrolls 4 Oblivion. Okay, first off, I've been waiting for an Oblivion remake or remaster forever, which I consider a remake. They're calling it a remaster. Either way, the game was fantastic, and it brought Elder Scrolls back in 2025 in a very meaningful way. Better than anything else has over the last decade. Game number 3 in this category is Tony Hawk's Pro Skater 3 and 4. Now again, this is a series that I have been waiting to see a comeback on for a very long time. Now I know we got Tony Hawk's Pro Skater 1 and 2, which was a fantastic game, but 3 and 4 really brought it back in a meaningful way. I think that the Tony Hawk franchise could absolutely make an even larger comeback with maybe even some new games in the franchise, or just give us that Tony Hawk's Underground remake that we've been
Underground remake? Shoot.
And the 4th nomination in this category is Fortnite Battle Royale mode. And this is an interesting choice, but in June of 2020,
oh, what? Really? The
Fortnite
Simpsons?
was at its 2nd lowest concurrent playership ever, with under 1 million concurrent players, which is actually very low for Fortnite. But just a few months later, the concurrent playership completely skyrocketed and brought Fortnite back to the map when they did the Simpsons season collaboration. If you haven't played it, that's when they completely turned the entire island in Fortnite into Springfield. I'm a huge Simpsons fan. And it even
built the
brought
house.
me back to Fortnite in a very meaningful way. And the winner of Best Video Game Comeback of 2025 is Fortnite Battle Royale. Okay, now before you start hitting the comments, like I said, let's take a realistic look at this. Fortnite had its 2nd lowest concurrent viewership ever just in the middle of this year, and a few months later somehow brought it back to being one of the most played, if not the most played, game on Twitch again. And that, my friends, is the definition of a video game comeback. Let's just see if they can keep it going for another year.
What an upset. Here at the GameStop Awards, we'd like to take a moment to ask, what is it about gaming that's so special?
I don't know.
Is it the thumbsticks?
Yeah.
Is it the 28-cent trading credit you get for Gears of War 4?
20 cents.
Or is it the people? Tonight, we'd like
The
to honor
people?
you, the consumer, for what you do best, consuming. The
Consuming.
nominees for best GameStop item GameStop customer Justin just bought are
Pokemon cards.
Spooky Clown,
Spooky Clown.
Buck the Bunny Controller,
Oh, Buck the Bunny
SpongeBob
controller.
game, Big ol' Rubik's Cube,
Everybody's liking
and the Skippy
SpongeBob.
Toilet Mystery Bag.
and the
SpongeBob
winner
is going hard
is
right now.
It's me. I feel pretty good right now. Got a lot of good stuff.
Horrific.
Ha!
This
That's funny.
What up? It's Dashy. Y'all might know me from YouTube as the guy that says, "What up? It's Dashy," and also yells a lot and curses a lot too. I want to apologize for that.
What?
But today we're here because GameStop asked your boy me. By the way,
What
fun
is-
fact: I did a skit at a GameStop. Y'all seen that? No, look it up. Dashy GameStop skit. No, okay. Like I was saying, GameStop asked me to present the scariest game of the year category. Here are this evening's
Yeah, this-
nominees for
I'm
scariest game of the
done.
year. Wait, is it evening when y'all posting this, or I don't? Silent Hill Elf. I don't have a weapon. Leave. Get your ass out of here. Is it coming down? Wait, I didn't explore the whole house. Hold on, hop out. Oh God! Oh God! I hear it! Oh no! Open the door quick! Oh no! Skin Freak.
The tunnel.
Why you caressing the seat like that? Sir, you good?
Looking to party. There's this great place under the tunnel. I can get you in.
No, I'm not a human. Go on, honey, shoot. Once mama's gone, my brood will come. They'll come for every last one of y'all. And Five Nights at Freddy's, Secret of the Mimic. Who was that? Who just came to life? I'm dead, they're up here. I don't know who it is. Oh God! Ah! And the winner for scariest game of the year goes to No, I'm not a human. I'm scared of dying. I'm scared of shooting you, but I gotta do what I gotta do. Wait. Can you cover my eyes? Do you have a kind of a bed? Oh God! Oh. Yo!
What? Holy sh! What is in there? Why would you need two of those? Alright, chumps, let's do this. Jenkins. I can't feel my tail.
Good evening, my name is Leonard, and I'm here tonight to present the nominees for Best Pokemon Card of the Year. You know, it is absolutely wonderful to be here tonight, especially to be joined by so many esteemed creators. And Scott the Wasp. No, I'm kidding, of course. I am
Oh, it's
truly
Pokemon.
thrilled to have been chosen to present as part of the very first prestigious GameStop Awards.
Pokemon.
In fact, I've been asked to read this announcement. After the show, winners can trade in their rewards for $19.99 in-store credit or $7 cash.
Yo, Fishy, you
Here
bugging.
are the nominees
You
for
bugging.
Best Pokemon Card of 2025. From Prismatic Evolutions, Umbreon.
Ooh, yeah.
From Destined Rivals,
I want that.
Mewtwo.
I want that. I want
From
that card.
Phantasmal Flames, Charizard.
I want that card. I want that one.
And 151C, Pikachu Gengar.
I want that card. I want that.
And the winner is...
Whoa, wait a minute. Whoa. Look at this. The man, he's in shorts. Oh. Whoa.
Charizard.
Wow,
Boy,
what?
I would hate to lose that category. GameStop would like to take a moment to thank everybody who helped them get this far. Those who didn't mind selling their Xbox One for $20 trading credit, Pokemon scalpers, this guy, and Eric.
I bought Shadow the Hedgehog here in 2006.
Thank you, everybody. You make GameStop GameStop.
Hey, I'm Riley, and welcome to GameStop.
Ooh!
Today I'm here to talk about trading your old consoles, games, and accessories to GameStop. Bring them in and we'll assess the condition, then give you cash or store credit. We accept a wide range of video games, consoles, and controllers, including retro. We also accept phones, tablets, Apple Watches, Apple TVs, and MacBooks.
Oh,
We accept
yeah?
collectibles like PSA graded cards and amiibos. Thanks for stopping by GameStop. See you later.
Say word.
Hold up. Ain't you wondering what the best Switch 1/2 game is? Well, lucky for you, you come to the right place. The Switch 2 came out this year, and it's had a bit of a
That was crazy though.
interesting launch, to say the least. There's been some up and downs. We've had game key cards, $110 Switch 2 docks. We've had some overpriced amiibo.
GameStop won't
and the
stop.
Virtual Boy came back.
GameStop won't
If
stop.
there wasn't a better time to be a Nintendo fan.
Don't
let me
make him
tell
go
you.
to Brooklyn
But anyway,
for that
let's
cheesecake.
move on to our nominees.
That Cheesecake Factory. What you talking
Donkey
about,
Kong
huh?
Bonanza. This one's
Donkey
got
Kong
the cool monkey.
Bonanza. Oh, really? They literally transformed Donkey Kong into like Brawly Kong. That's pretty cool.
Metroid Prime 4. Don't forget your amiibo so you can listen to the desert music in this grand return to the Prime series.
There's tell of a hunter.
Ooh, what is this? Metroid? Oh! It's Metroid.
Kirby Air Riders.
Kirby? I wonder if I'm gonna get a. I hope I don't get copyright strike for this. I think it's too late anyways. And then imagine me, I would have to like crop out the whole part of the stream. Oh, it's Pokemon! It's a Pokemon! It's a Pokemon! The Z to A.
Dude, what do you do? Go away. Go away.
Why is he in
Sorry,
shorts
it's
too?
my brother. Anyway, let's get to the winner for Best Switch 1/2 game.
What about an award for the biggest
And the
bag
winner
holder?
is
Nah, you should see
Super
the
Monkey Ball 2 for Nintendo GameCube. Nah, I'm just kidding. I'm sorry. I
you
wish
should see
that
the
was
chat
the
on
actual winner
on
is
Twitter.
Donkey Kong Bonanza. Congratulations.
You should
to
see the
DJ.
chat, like what they're
Congrats to
saying on
Pauline.
there on the stream.
Nintendo really hit it out of the park this year with the
Kitty
3D
and Riley
platformers.
collab.
Really, it's just an absolutely incredible game, and congratulations to that for winning.
Somebody said I finished Pokemon ZA and caught everything. The game is trash. Hilarious. Aye. I still like the stock. Hey, I know that
Easy
street.
up here. The nominees for the GameStop Creator of the Year are
He's cold.
Corey X Kenshin.
Loser, sore loser, huh?
He's cold. He's literally doing that outside in
Did you
the
just pull a
cold
gun
weather.
on me over a mobile game?
I show speed.
Bro, chat, can somebody please pick me up? I don't know where I'm at. Hey, you sure you got the right spot? I'm trying to travel across the whole America and my tour bus is broken.
What?
I
What?
can help you with that. Oh, hell no.
Video
What?
game donkey.
Kirby Air Riders is a racing game where killing makes you go faster. It's an experience made with the slickness of the
What is
unlockable
this?
Slick type star.
Slick Star.
There's no way. Really?
The menus for Sakurai's games are so stylish and exuberant that he married the lady who designs them. The developers want you to feel cool for playing this, and I am. Look how cool I am.
Look how cool I
did
am.
that.
And the Rizzler.
Wow.
When you look back on your life, or this important, what's maybe a choice you wish you'd have made differently when you look back on your life?
So what are we doing? He's like,
But is there like something you're like, maybe I could have done that a little different, or maybe I wish I hadn't done that?
When I lost the Fortnite match.
Burned you, huh?
And, like, I tried to do a strategy, and then I tried to do that strategy, and it didn't work.
Oh boy, what is this?
And the winner for GameStop Creator of
I
the
show
Year.
speed, I'm sure.
My man, Corey X Kenshin.
Oh!
Congratulations.
Corey. He's literally like, he's longboarding in New York when it's like 35 degrees. He was cold as balls. Hey, it's Buck the Bunny. Oh, remember this? The trailer for this? Is he finally gonna go in there? He's finally gonna go inside. Oh, I gotta remember the trailer for this. He's finally in. He's finally in the diner. Oh, the push starter cave. Remember? Remember this? Oh. Yeah, his mouth. What is going on?
It's so beautiful.
That's what it was. That trailer from Buck the Bunny. That was from the Power Packs. Oh. No wonder.
Now, this last category was my favorite, but this next one is my favorite. Take it away, you.
You.
Good evening, ladies and gentlemen. My name is Vintendo, and tonight I have the honor of presenting a
I
truly
saw this
prestigious
guy.
award, the coveted, illustrious, stupendous,
that guy the other day
Shiny
was
Hunter
opening
of
Power
the
Packs.
Year award. An award so sacred, so deeply respected that it requires absolutely zero skill and is determined entirely by luck.
So he was opening
All right,
on a
now,
live
before
stream
I
on
reveal
YouTube.
the
Power
nominees,
Packs.
I just
I
want
think
you all to
he
know
bought like.
you're all winners.
Oh,
I mean,
Buck
not
the
in
Bunny,
this
yeah,
category,
Buck
of course,
the
because
Bunny.
there can only
That's
be
his
one
name.
winner, but like in life, probably.
But yeah, he was streaming,
Hopefully,
opening
all right,
Power
when
Packs.
it comes to shiny hunting,
He opened the
there
Lunar
can only
Pack.
be one goat, one chosen
I think he
warrior,
opened like two
one
of them. I
individual
forgot.
who looked randomness straight in the eyes and said, "Yeah, I'll reset 12,042
They should have
times
put
for a
Goblin
slightly
clips on
different
here
colored
instead.
duck."
He's
And
a
the
lot
nominees are
more entertaining.
John Stone, the man, the myth, the reset machine.
Yeah. Yeah, that's why I'm not live, because I be farting. For real. Don't find the shiny right now.
This is the worst video of all time!
This is the worst video.
Party Arlie. You know it's gonna be a shiny party when she's in the building.
Oh. What? What just happened? Is he even saying anything? What is going?
Thanks for hanging.
What is going on? Oh, it's a shiny Snorlax. Wow, people, they just go crazy for shinies, huh?
Oh,
yeah, if you think there's no
PM7, proof that
there's just no way in
patience
hell
is
that
a
I would spend
superpower, and not all heroes wear capes.
Nope.
There it is! Shiny magic
I'd rather spend
Looks so freaking good.
I'd rather spend
Nice.
And finally, Sauce McGavin, a man who
I'd rather
lives and
spend like
breathes shinies hell,
$250 on
even his
10
bald-ass head is
starter
shiny.
packs and just
Whoa,
get myself
shiny off the
a collection of slabs.
Shiny off the bat! Are you kidding me? Shiny
And the winner
off the
is
bat.
the RNG ruler, the Sultan of Sparkles, the shiny chief himself, Sauce McGavin. Congratulations,
Sauce
my boy!
McGavin.
Get up here and claim your shiny crown, you beautiful, glittering man! Wow!
So does he get the reward at home or something?
That's a mighty fine goat you got there. You want to swap for a new one?
What do you got?
How about this one?
This is for the best.
And that's how a trade works, except here we use games.
All right.
All right.
When you want to trade games, there's only one place to go. At GameStop, you can trade your finished games
Oh,
for cash or in-store
boy.
credit and save big on new games. Trade at GameStop.com. Power to the players.
Ay, ay, ay.
Hello everyone, I am Ryan Benecki and I've been covering PlayStation news on my YouTube channel Mystic for about 13 something years, and I am here to present the award for the best PlayStation 5 game of 2025.
Right.
It has been an incredible year for games. I know it sounds like that is said every year, but this one really did seem overwhelming with just how many different types of experiences we got, from the big AAA epics to the more modest indie studios still putting out games that can compete with the big AAA experiences. There is just a lot going on. There's so little time, and yet only one game can walk away with this award. And the nominees are Death Stranding 2 on the beach.
Death Stranding 2 on the bench.
I'm asking you to extend
Whoa,
a
what is
network to the
this?
south. That's our last, best hope of saving the world.
GameStop dropping to 2184 and then popping to 2234.
Humanity is still in danger.
Should that be the
Still on the brink of extinction.
Okay, cool, sure.
Player Obscure Expedition 33.
Alright, let's skip all this. Don't care about that.
And you will know my name.
Oh, what is this? That looks fire.
And the winner is, got it right here, Claire Obscure Expedition 33 from Sandfall Interactive. Congratulations.
Yeah, congratulations.
You got the goods? We got.
Alright, let's see. What's going on here?
Fantastic experience, and it's a well-deserved win for Sandfall.
Alright.
Thank you so much, everyone.
Alright, let's see what this is all about. Oh, it's about to hit a reindeer. No! Oh no.
I'm sorry.
Oh no.
You got the goods? We got the goods.
Hey! That's my truck! Wait, no!
Not
Santa
anymore.
wishes he had the stuff we've got.
Ah, he got played.
Joy to the players.
What is going on?
It's the fucking nerd here, and I've been summoned by a corporate entity to present an award for the worst game of the year. Man, what year are we on at this point? 2025? That's a whole lot of numbers just to say this year sucked.
Yeah,
now,
that's right.
thankfully, I haven't
This year
played
sucked.
all of these games, but I guess somebody had to in order for them to get nominated. So
This year sucked.
That's a depressing thought. But hey, there must have been some good games that came out this year too. And you know the old saying, you gotta take the good with the bad sometimes. Or
Sometimes
in
we
this
were
case,
taking the bad with the
you just gotta
good.
Fucking suffer.
Just gotta.
Anyway,
We've suffered long enough.
The worst game of the year are
Stupid idiot.
Mind's Eye. What the hell is this?
What?
Well, apparently, it's got technical issues, performance problems, buggy mechanics. It failed.
Looks
to
like a
deliver
fake
on expectations,
GTA.
And it just plain sucks.
What?
Oh, so that's
This guy's
what the
just
hell it
floating
is.
in the air.
Nintendo Switch 2 Welcome Tour. What the fuck kind of name is that? Is this a video game or the title of an instruction booklet?
It's an
Well,
instruction
apparently that's
booklet.
not too far from the truth.
What?
But an interactive instruction booklet is actually
Oh,
a novel concept,
oh,
as
oh.
long as it's free and bundled in with the system.
Johnny is going to sleep.
What were they thinking?
Glad you just got home safe,
26.
Johnny.
What the hell? That's just some
See
random
you
ass
tomorrow.
letters and numbers. Well,
You have a
apparently,
good
what makes
night,
this game so
Johnny.
bad is nobody can tell it apart from the last game in the series. I can't tell
That
what
looks
the
the
fuck game even
same.
means.
What?
And Superman 64, fuck this game. And the winner is Nintendo Switch 2 Welcome Tour.
Whoa, what just happened here?
I'll drink to that.
Oh,
To numb the pain.
just got glitched. Got glitched. What happened here?
Well, that just happened. 2025 has been a tremendous year for video game releases, such as Donkey Kong Country Returns HD.
What just happened?
But sometimes it's not just about the games. Sometimes it's about the worst-selling video game consoles of 2025. Here are your nominees for worst-selling video game consoles of... Finally, the Wii U wins something.
The Wii U.
Next up, this.
Okay, where do we...
Hello, Scott. It's Jim. Thank you for inviting me onto this special Game Awards.
Awards?
Now, we all love video games, right? So I'll be presenting my nominees for the award of the game I only had time to put more than 2 hours into because I was busy of the year. And the winner goes to Hades 2 on the Switch 2. Wow, what a game. Is it good? How many hours did I put into Hades 2 on the Switch 2? None. Because I
None.
played it on the Steam Deck. Have a good game
What?
game players, and don't forget, remember.
What?
Yeah, we take these. The PS4, where the cords at? Like, what you need to do with this?
Just the games, not the console.
Just the games, not
that
the
don't make
console.
no damn sense. The games, I don't.
You know, the digital games, man.
The digital games.
Just the digital games from inside the console.
Yeah, I still need the console.
They still need the
No.
console. What?
Get your ass out my store, bro. Come on, man. Sir, please. Oh, man, come on, don't do this to me, man. Come on. Sir, please. I need to feed my dogs. You should have been fed
I
that
need
dog.
to feed my dogs. You can't trade in your
Power to
digital
the players.
games.
All right, this is Jay
Oh,
from
boy.
and I'm about to give you
Dude, that's him?
the top.
Yeah, what kind of
operator
drugs was he
Call of Duty
taking?
Black Ops 6, 2025, GameStop. Snoop to the nooch. I'm about to get in my cave, sit down, and give you the
Give you the...
So, best operator skins of
Dude, what happened to
Black
him?
Ops 6, 2025 award. Chucky. Bride
No.
of Chucky.
Really? They had
Jason.
that?
Not this Jason, but Jason from Friday the 13th.
Wow.
Jay and Silent Bob. You know what? Make this 5. Bluntman and Chronic. Now, all of them had their style. You know, all of them were cool. They had different styles and such. But the winner goes to Jay and Silent Bob. Or just Jay. Or just Chronic. The winner is Jay.
What on earth?
Jay.
What? All right. Yeah, just move on from this.
No.
Dude, we're all waiting for you, Tilted. What are you doing, you idiot?
Well.
Hope you were nice this year, because right now all the coolest Fortnite gifts are available at GameStop. Joy to the players.
Oh boy.
What's up? I'm Brendan. You may recognize me from my TikTok videos where I prank GameStop employees. Well, for legal reasons, I worked an entire shift here at GameStop in Chicago on Trade Anything Day. Let me tell you, we had some crazy items come in. Now, what was the best one of the year? Here are your nominees for Best Trade of the Year. Taxidermy Bobcat.
Wow.
Bird Game 3.
No way.
The Declaration of Independence.
Stop it.
GTA 6.
It's
But
wasted.
I'm in the game for some reason.
Wow, okay.
Flamingo Kid.
Flamingo Kid?
VHS tape sealed.
No way.
Wow, there's a lot of great nominees.
That should be PSA
This
graded.
is crazy. And your winner is
Flamingo?
Taxidermy Bobcat. I mean, what's this Bobcat's backstory? Where did he come from? I don't know. Although a good runner-up is GTA 6 with me on the cover.
Yeah, I like the Bobcat better. Xbox. Oops.
Guys, I am so sorry I'm late for our LARPing session. What is that?
We're playing Diablo 4 co-op on the Xbox Series X, and we got the bundle, so we have extra endgame items.
No,
You wouldn't have expected her to talk like that.
The couch?
Yes, it's an anachronism. It's ruining my immersion.
And the Xbox and the TV aren't?
Games, gear, knowledge. GameStop. Power to the players.
What's up, guys? This is John from the channel Spawnwave, and I'm here to present the Xbox Game of the Year. So let's take a look at the nominees.
GTA 6
Starting out
won't
with
come out
Clear
until
Obscure
next year.
Expedition 33, Sandfall Interactive.
Cares about
Split Fiction,
this?
High Quality.
Yes, yes, yes. What if you get some what? Whoa.
Oh, that's a good card. Oh, that's good. Oh!
Yeah. I like that guy. That guy is awesome.
First live stream cold. Who's that kid? Melodic 10, 144. Boom, I'm done.
Most obvious outcome ever. Wait.
Oh.
Let's freaking go.
But it's
Hi, we're Vegas 64.
and I don't give a fuck.
Candy at the game store.
I don't care. Okay.
Go home fat with holiday goodies. GameStop. Joy to the
Joyce
players.
Okay, who is this?
Oh, as exciting as this past year has been for gaming, let us not forget all of the upcoming gems that await us next year.
What's coming?
Here
What's coming?
Are your nominees?
What's coming?
Most anticipated game of 2026.
GTA 6. Come on.
Grand Theft Auto 6.
Yay! Vice City again, yeah. Oh.
Hey, if you got friends, you hook me up, please.
Resident Evil Requiem.
Resident Evil Requiem?
You're not like other people, you know. You're quite unique.
Tell me what's going on. Something important. Mom, I'm scared. Grace.
Oh, that looks sick. The graphics are crazy.
There's no escaping your destiny.
Ooh, look at that gap. Is that Jill? No, that's not Jill.
The Witcher 4.
All right, we know that it's gonna be Grand Theft Auto. Wait, the Bethesda games? What game is this? Lord of the Rings? No, I'm joking. The Elder Scrolls 6. The Elder Scrolls 6.
Finnegan Fox for
Alright.
Theft Auto 6. I knew it.
I knew it
and
too.
Rockstar, if you're
Yeah.
watching this, and I know you are, take as long as you need, Queen. I think I speak for everyone.
Take
when
as
I
long
say,
as you need.
If that game needs another 5 years of polish, take all the time in the world. We gamers can wait.
We gamers can
Cheers
wait.
to that.
Oh, you imagine that? Yeah, let's delay another
And the plot
3-4
thickens, I
years.
suppose.
Let's
Well,
make sure that
folks,
this game is
we made
the greatest game of all time.
of the year. Only one can win. Who's it gonna be? Well, let's.
All right, game of the year is gonna be what? Who? Oh, Battlefield. I still have yet to play this game. I have never. You know how long it's been since I last played PlayStation 4? I feel like I just don't have time. I mean, I can have time. It's just that I am not rich enough to be able to take all the time I want so I can be able to play these games. One day I will. One day. Storma!
I will fight. I swear it.
No. No.
I found.
Alright. No, it's gonna be Battlefield 6. Wait. Hold on. Wait a minute.
Halo 3.
Halo 3? Game of the year, Halo 3?
Maybe someone up there is wondering what it's like here.
Dude.
Do you think we'll ever meet them? I hope so. Don't you?
Wait a minute. Why is this game of the year? Game. Oh, all right, James. All right, James. Thank you for stopping by in the stream and hanging out with us. As always, sleep well. Hopefully, you'll have a better morning tomorrow, better than yesterday and the previous mornings. Wait a minute. Wait.
And the game of the year goes to...
But why is that part of it?
Halo 3! For the 18th year in a row, the best game of the year is Halo 3. Crack open a cold one with your boys and get that LAN party going. It's Beanie Weenie time. Halo 3 wins again.
What? I'm confused. Pre-owned
The GameStop
still at
awards
GameStop.
are wrapping up, and thank you GameStop for giving me the opportunity of a lifetime to host.
Why does
the
this guy look
GameStop
depressed?
Awards in one of their historic
This
stores
guy in the background.
based
Look at
in
him.
sunny Toledo, Ohio. GameStop is a massive part of my identity.
He wants to go
While
home.
my therapist can bitch about that all they want, they will never truly understand how much this corporate entity means to me.
Are you gonna buy something or not?
But before we go, here's one more thing.
Oh, here we go.
I love you guys.
Are you serious? You just got tongued by Ryan Cohen.
We go. Here's one more thing.
Seriously? Or was that like recorded?
I love you guys.
Seriously, dude?
I love.
He's licking the imaginary lollipop.
Entity.
I love you guys.
You know, a lot of people are gonna like really take that the wrong way. I'm just giving you a heads up. There's gonna be a lot of memes about that. Like for real, dude.
I love you guys.
Pause. Still almost at the 69K, and the GameStop Awards event is now done. So okay. Was there a pop for that or no? Because that the stream did not cause any type of reaction whatsoever. What did we just watch? Is this for real? Let's see. Breaking letter to Ryan Cohen and GameStop urging company to investigate illegal short selling. Retail United Advocacy Group is urging GameStop to investigate potential short selling manipulation and call on the SEC to reverse the delay of the short transparency rule. Let's see. Let's see. Let's read this letter that just came out today. Retail United Advocacy Group, December 10th, 2025, GameStop Corp Headquarters, Westport Parkway, Grapevine, Texas. To Ryan Cohen and the GameStop Board of Directors. Retail United Advocacy Group is launching an initiative to address a growing concern shared by millions of retail investors: abusive short selling and potential naked shorting taking place across U.S. equity markets. This is a matter of significant concern, and multiple companies have already uncovered clear evidence of manipulation and taken meaningful legal and regulatory action. We are asking GameStop to take immediate action to investigate potential market manipulation affecting your stock, including abusive short selling, potential naked shorting, spoofing, and any irregular trading activity that may be harming your shareholders. Many investors who are invested in GameStop stock have expressed concerns that these forms of market manipulation may be happening to GameStop specifically. These concerns are not isolated. They reflect a broader trend of retail shareholders questioning unexplained price pressure, irregular trading patterns, and persistent high short activity across multiple publicly traded companies. Retail investors point to multiple red flags that strongly suggest GameStop has been targeted by persistent and coordinated short-side manipulation. The clearest example occurred in 2019 and 2020 when GameStop's reported short interest exceeded the company's entire public float, with some estimates reaching 140 to 150%. Such levels are structurally impossible in a fair market and indicate that shares were being relent, rehypothecated, and shorted far beyond actual supply. Investors also highlighted repeated spikes and fails to deliver, suggesting chronic settlement failures and the possible use of synthetic or improperly located shares. A large share of GameStop's daily trading volume has also been routed through dark pools and off-exchange venues, obscuring real price discovery and allowing major players to operate with reduced transparency. Shareholders further point to the events of January 2021 when retail brokerages restricted buying while allowing selling to continue. At a time when major short funds were reporting significant losses, many believe that this demonstrated that market structure and risk controls were used in ways that protected short-biased institutions at the expense of long shareholders. Taken together, these factors have convinced many investors that GameStop has been and may still be subjected to aggressive and potentially abusive short selling practices that demand a full investigative response. Again, this was sourced, and this was on Retail United Advocacy Group sends letters to 50 plus public companies demanding market manipulation investigations. This was 12 hours ago. Medium.com here posted this. You can see that the 50 publicly traded companies, including GameStop, AMC Theaters, Beyond Meat, Open Door, and others, to investigate potential market manipulation affecting their stocks. And these letters urges CEOs and board of directors to examine evidence of abusive short selling, potential naked shorting, irregular trading behavior, fails to deliver patterns, and off-exchange trading activity that may be harming retail shareholders. In addition, Retail United is urging every CEO contacted to write directly to the chairman of the SEC to demand the immediate reversal of the SEC's decision to delay enhanced short sale transparency rules until 2028. Retail shareholders believe these transparency requirements are critical for identifying large short positions and ensuring fair, honest markets. This campaign represents a coordinated push for corporate accountability, stronger market oversight, and increased transparency across the U.S. equities market. There is a link to all the letters to 50 plus public companies. There's the AMC Theaters letter and Beyond Meat letter. Let's see. It kind of just says the same thing pretty much. Huh. Wow. Wow. That's a long letter here. Wow. Let's see. After hiring Share Intel to analyze their trading data and having their legal team review the findings, they publicly announced evidence of suspected market manipulation and subsequently filed a $250 million lawsuit against the actors believed to be involved. Northwest Bio, NWBO, and Quantum Biopharma, QNTM, have likewise taken major action after identifying irregular, suspicious, and potentially abusive trading activity further proving that companies who examine their trading data often uncover manipulation that demands a strong response. Leadership at Trump Media and Technology Group has also taken forceful action after accusing market participants of engaging in naked short selling of the company's stock. DJT CEO Devin Nunes publicly asserted that manipulative trading may be occurring and initiated a formal challenge by sending letters directly to NASDAQ, members of Congress, and multiple oversight bodies demanding investigations, accountability, and full transparency. Retail United Advocacy Group respectfully urges AMC's leadership to take similar action, requesting that AMC initiate an immediate investigation into whether your stock is being targeted by abusive short selling, naked shorting, spoofing, or other manipulative trading practices. Independent tools such as Share Intel, along with specialized legal and forensic market analysis teams have been proven effective in helping companies uncover the truth if evidence of wrongdoing is found. We encourage your legal counsel and compliance teams to consider all appropriate actions, including regulatory complaints or litigation. Says here, we also urge AMC to write directly to the chairman of the SEC to express concerns regarding the lack of transparency around short positions over 5%. This request has become even more urgent given the SEC's recent announcement delaying the new short sale reporting requirements until 2028, further postponing critical visibility into significant short positions that companies and shareholders deserve to have. Companies should have the right to know who is taking substantial short positions against their float, just as long position holders are required to disclose ownership. We request that AMC urge the SEC to reverse its decisions to delay these transparency rules and move forward with their implementation without further postponement. Also saying here that we further request that AMC call on the SEC to launch an independent investigation into abusive short selling and potential naked shorting affected heavily targeted public companies. Blah 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 blah. Blah 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 blah. But I want to know if these people even know. Yeah. Exactly. And like, apparently he had a stroke. Was that for real? I couldn't even tell. I mean, let me see. Let me go on and type in here Adam Aaron. Let's see. Oh, okay. So yeah, this was the post here on X by Adam Aaron, or maybe somebody else wrote it for him. Sometimes some of you like what I say or do. Thank you. Sometimes some of you dislike what I say or do, fairly or unfairly. Criticism comes with the territory when you run a public company as visible as AMC. But I have tried hard to be transparent and to communicate freely with you. To that end, penis. AMC Entertainment issues statement about the health of chairman and CEO Adam Aaron. So, mind you, he's 71 years old. And this was the issued statement on that date, December 4th. He immediately received state-of-the-art emergency medical care at the National Hospital for Neurology and Neurological Sciences, a superb public hospital in London. What was he doing in London? Renowned for its stroke care and operated by the United Kingdom's National Health Service. He received a timely injection of clot-busting thrombolytic medication, staying overnight at the hospital for 2 nights. Fortunately, there are no indications of loss of cognitive brain function related to Mr. Aaron's ability to process complex information, his memory of his written communications, which are all normal and undiminished. His only meaningful limitation was an initial slurring of his speech. He immediately commenced speech therapy and has already seen a remarkable recovery in the quality and tenor of his voice. He expects to make a speedy and full recovery. Given his mental acuity and physical resilience, the Almighty, Mr. Aaron remains in full command at the helm of AMC and continues to perform his duties as chairman, chief executive officer, and president. He has kept in close and constant communication with the board of directors of AMC with respect both to the prognosis for his recovery as well as for the general business affairs of the company. Says that Mr. Aaron remained in London before flying on commercial flights back to the United States this past weekend to attend Monday's Los Angeles world premiere of James Cameron's last masterpiece, Avatar: Fire and Ash. Following the premiere on December 3rd, Mr. Aaron returned to his personal residence and AMC's headquarters location in metropolitan Kansas City. As has been the case since his brief hospital stay, he continues to work on a full-time basis. Mr. Aaron said, "I so much want to thank the immensely skilled and caring staff at the National Hospital for Neurology and Neurological Sciences. In thinking more broadly about what transpired of late, I am a poster child for listening to one's own body and immediately seeking emergency medical care at the very first signs of any potential serious abnormality. I urge any and all not to delay should warning signs ever arise. For those alert enough to obtain such care quickly, the incredibly devoted men and women in emergency rooms the world over save lives every single day." Yeah, I mean, facts. Mr. Aaron and the company thought it was wisest to issue this fulsome statement to proactively dispel any conjecture that might arise during any of his public or private appearances. In respect to Mr. Aaron's privacy, however, AMC does not plan to comment further on his recovery. Oh, damn. The comments. Ooh. Look at what this one says right here. Sheesh. Good news. Karma is getting you. So basically we have a mashed potato that won't step down unless he don't wake up. Corruption will end you like it did Dianne Feinstein. Let's hope it's a suffering, painful departure, because it can't happen to a better person. Damn, wow. That is crazy. That is hateful. That received 9 likes. Sheesh. Let's see. May God bless you with health and more years to come. Hope you are feeling well. Prayers for a good and quick recovery, Fokker. Why did he call her? Why did he say Fokker? That's crazy. People are just, they don't even care. You're a fraudster who screwed his investors and belong in prison. November 17, very interesting date there. November 17, where do you see that there? Damn. Let's see. For the love of God, retire. You have killed this company. Looks like the stress of screwing over millions of retail investors is finally catching up to you. Hopefully we will have new leadership that knows what they're doing soon. Shit. They have good healthcare in prison, you criminal. That one has 95 likes. Resign, unfit to serve. Your days are numbered. 88 likes. And the karma begins. I have no sympathy for you. You destroyed a lot of good people. This guy says an unfortunate medical event. And an unfortunate medical event doesn't mean we need to now pretend you're something other than what you are, which is an absolute embarrassment to AMC Theaters and its shareholders. I hope you physically recover and stay healthy, but nothing changes the fact that you failed at leading AMC, and you've repeatedly screwed the very people that saved your job and the company. Good day, Mr. Adam Aaron. Sheesh. Look at what this one says here. Right on time, the Kansas City Shuffle complete. The convenient health crisis. The don't blame me disappearing act. The denial of financial crimes, and the 10-year Apollo escape plan coming full circle. Oh boy. Oh, we're gonna post this under tinfoil hat here. That's insane. Oof. Oof. Wow. Yeah. Ay, ay, ay. Huh? Sure. Yeah, sure. I guess. That's crazy. Sometimes you realize you're a dilution, so no regard to the family. Yo. So yeah, I'm sorry. The comments are crazy. Like, I can't even explain it, but wow. Oh, have you watched Project Popcorn? Anyways, let me just move on from this subject. So yeah, what do you think about Starlink going public? 2 hours ago, just in, Elon Musk confirms SpaceX plans to IPO. Let's see. Demand will be insane given its dominance, Starlink revenue, reusable rockets, and government contracts. When is the IPO exactly? Y'all know? Y'all know when? Where do I go for that? I forgot where it was. Watch list. I think it's this one here. IPO. Upcoming. It doesn't say. Listed. I mean, huh. Okay. What, oh, the end of January. Okay. I think it will have some of its success. It tells you to buy ASTS and AMD. Let's see, I interviewed for an engineering job at SpaceX in 2015. Rocket tour was amazing. In the last round, they went with the other guy. I didn't try again. Probably a gigantic missed opportunity to help make humans multi-planetary and earn equity. $1 trillion IPO this year. Orbit bound before it even hits the market. Yeah, I think the price the share price, they'll probably start off at double digits already. It will definitely, I'll guarantee you that it will be at double digits. The offering will be double digits. And then from there it'll shoot up to triple digits before it all starts to come down and I mean, like all IPOs in general, but I think Starlink will be it will be the talk of town. It will be like the biggest, it will be like the biggest focus. But since it's not under any IPOs right now, because I don't see it. It's not listed on here on Webull. So probably would have to wait until the date gets closer. And anyways, I don't see it here, so probably would have to wait until I don't know. Midas spoke about another IPO you can pre-order on Robinhood. The video is out today. Okay. Oh man, my blend Sentinel-1 is classed as cybersecurity. Ignore distractions. I can pre-order MDLN. I can't pre-order WLTH. I want both. So MDLN. Oh, I see it right in front of my face. Alright, so their price range is between $26 and $30 per share. Expected to trade on the 17th of December. Right here. Sure, right now. Let me show you. Let me show you. La mission, yo. Oh, dang. How do I look at or actions, releases? Medline. General form for registration. Amend draft registration. Insiders. Corporate actions, analysis, financials. Let me see. Definitely good for long-term play, but 50-50 for short-term gains. I'm on the fence. Gonna be a massive IPO. The biggest IPO of the year, including last year, $255 billion. I'm not sure about this one. Don't get yourself caught in the action. Honestly, I've never knew exactly how to play IPOs, but you know, we've seen so many IPOs come and gone and how they've ran and the reaction. It's, you know, it's not supposed to be a long-term hold. You just get in and all of a sudden you're in it for the big win. But yeah, that's let's see. So the shares they're offering here, 179 million shares. Again, the price range between $26 and $30 per share. Let me read the reminder here. The investment amount used for purchasing this offering will be locked up in your trading account until the order is canceled or executed on the effective date. If you receive an allocation, the shares will be posted onto your account. To your account on the effective date, you can check your allocation and positions widget. The final purchase amount is determined by the number of shares allocated to you. Any unused cash will be automatically freed up in your account. IPO secondary orders only represent conditional offering to buy (COB) and do not guarantee you will receive all shares requested. There's a possibility you will be allocated less or none at all. This depends on the demand and type of offering and past IPO involvement. Got the prospectus here, the Form S1. Sure. How about SMX? Were you aware of this stock? I think I've heard about it. Let me see. Medline will have two classes of common stock outstanding after this offering. Class A common stock and Class B common stock. Okay. Intends to use the proceeds from the issuance of shares in this offering. As described under organizational structure, which Medline Holdings will in turn use for the repayment of indebtedness for general corporate purposes and to bear all of the expenses of this offering. Intends to use any proceeds from the issuance of shares pursuant to any exercise by the underwriters of their option to purchase additional shares of Class A common stock, to purchase or redeem outstanding equity interests from certain of from certain of our pre-IPO owners at a price per equity interest equal to the initial price offering price per share of our Class A common stock, less the underwriting discounts and commissions. Acting on behalf of the accounts managed by several joint indicated an interest in purchasing up to. Oh, so whoever Bailey Gifford Overseas Limited, acting on behalf of a number of its and if its affiliates, clients, one or more funds and or accounts managed by Capital Research Global Investors, Counterpoint Global, which is part of Morgan Stanley Investment Management, one or more funds managed by Durable Capital Partners, LP, GIC, WCM Investment Management, LLC, have severally and not jointly indicated an interest in purchasing up to an aggregate of $2.35 million in shares of the Class A common stock in the offering and the initial public offering price and on the same terms as the other purchasers in the offering. Any shares so purchased by the cornerstone investors will not be subject to a lockup agreement with the underwriters. Because these indications of interest are not binding agreements or commitments to purchase, members of the Mills family and their affiliates or the cornerstone investors may determine to purchase more, less, or no shares in this offering. Or the underwriters may determine to sell more, less, or no shares to members of the Mills family and their affiliates or the cornerstone investors. Joint book running managers includes Barclays, Jefferies, Citigroup, Dutch Bank, Securities, UBS. Got a lot of big names on this. A lot of big names. Wells Fargo, Security, Santander, TD Cohen, Piper Sandler, Mizuho, Rothschild & Co. Oh my gosh. This is going to be really interesting. Oh, yeah. All right. Give me 1 second. Let me look at SMX real quick. Security Matters. Public Limited Company. It's $146.30 stock. What's going on with this stock? What happened to this stock? Looks like it went through like 4, 5, 6 reverse splits. Jeez, what? Why? Why did it do that? August 21st, 2023, a 1-for-22 reverse split. July 15, 2024, a 1-for-75 reverse split. January 15, 2025, a 2-for-57 reverse split. June 16, 2025, a 10-for-41 reverse split. August 7, 2025, a 1-for-7 reverse split. October 23rd, 2025, a 91 for 1,000 reverse split. What is this? November 18, 2025, a 1-for-8 reverse split. Dude, what is up with this? This is like another, I don't get it. The only difference is compared to Mullen, this is still a 3-digit price company at 146.30. How did it get so many reverse splits like that? And on top of that, dude, SMX looks like it's It's toppled over. 7 hours ago. Industrial traceability, circularity, and supply chains integrity have arrived, and recyclers are paying attention to the provider behind it, SMX. A signal to recyclers that industrial traceability is finally arriving. What is this? NAFRA's renewed engagement places SMX on the radar of the operators who feel the impact most. Recyclers live with the consequences of every upstream decision. When manufacturers introduce additives, colorants, and flame retardants into plastics, recyclers inherit the complexity. They are the ones forced to manage contamination, comply with regulations, and absorb the cost of sorting materials that cannot be reliably identified. Flame retardant plastics sit at the center of this problem, and they are essential for safety but difficult to classify, and they often move straight to disposal because existing technologies cannot separate them with consistent accuracy. And that is why SMX's return to the NAFRA forum sends a powerful signal downstream. Recyclers pay attention when leadership bodies highlight a tool that has solved a long-standing bottleneck. Earlier this year, SMX demonstrated industrial speed sorting with 99 to 100% accuracy, including for carbon black materials that near-infrared systems routinely miss. That level of performance does not just improve throughput, it changes the economics of entire material categories. The renewed invitation suggests that NAFRA sees this technology as more than a technical achievement. It is something that the industry should understand because it addresses one of the most expensive and persistent challenges recyclers face. For operators working with thin margins and rising compliance costs, the ability to quickly and accurately identify flame retardant plastics is not incremental, it is transformative. Most recyclers do not dispose of flame retardant plastics because they want to. They do it because they cannot certify the output. Without reliable identification, these materials cannot enter higher value streams. They are treated as risk, not opportunity. SMX's system changes that dynamic. By assigning identity at the molecular level and carrying that identity through a digital passport, recyclers gain access to the data required to classify materials with confidence and match them with buyers who need verified input. Okay, so this is a long freaking read. Holy shit. But if we're talking about technicals here, why this was a P&D. Holy moly, like I didn't even realize how much it ran. Like, what was this, a squeeze? What is this? Are you serious? No way. That is what? From a low of $3.12 back in November 19, and this thing ran up, literally squeezed the shit out of itself, running as high as 76.51 on November 28th, to then come back down. Mother piece of Are you serious right now, bro? Really? Cucarachita. Wow, bro. And then this ran up from like $56, $57 all the way to as high as what? $490. This is like a once in a blue opportunity. Who would have definitely seen this coming? But now in the process of a P&D, this is a huge P&D, and this is just starting to hit a death cross. Here, the 9 and 20, about to soon hit that death cross there. Yo, what up, Eric? He called out like 3 in the last few weeks that went crazy. But did he get in? Did he actually get in? And if that's the case, then did he show proof? Did he show his position? I'm asking for a friend. I want to see him show proof that he got into that play. If he called out those plays, he did. So he's a billionaire now, right? He should be retired now, right? It's insanity. No, he didn't, but he called them out and said jump on them. Sheesh. Fed funds rate in January 2026. How do you buy these things? So how can we find the next one? Where does he get his intel from?
I would like to know where he gets his source from. We've definitely called out a lot of plays before in the past, but we never got in. We all could have been rich, theoretically speaking, not financial advice. Did you mention SMX to us when it was happening? Did you get in?
Silver is almost up 1%. Silver is climbing up ever so more. I cannot believe this. Ay Dios míos. You too as well, Gary. Sleep well. Wishing you a better tomorrow than yesterday. And that you have a great morning. And yeah, I'll stream. I'll stream tomorrow morning. And I'll see you then. Thank you, Gary.
Thank you.
We was all talking about silver, even when it was at $28, $30 an ounce. Isn't that crazy? Insane. No way. You had a dream of flu? He yellowed in VRA. Damn.
Vera Bradley.
Vera Bradley. Yes.
What is Vera Bradley doing? What are you doing? Why are you underneath the 200?
You bitch.
It's like very. Why? Why is this? Why does this look like that, man? It's like really heavy down there. It's got really, really heavy flows down there. Silver, silver, silver. Actually, I'm curious. Let's see. Old. Let's see. Let's see. Let's see when we started putting the name Silver on the Discord. Oh, here, look. May 16, 2024. I had posted this live stream from this person. I forgot what his name is. But the title was is they reject the silver price for a reason. And that's what got me intrigued about that. That's where it was. That's where it, let's see. They reject the silver price for a reason. The most replayed.
All based off the exact same thing. It's actually two things. Their economy falls and their morality falls. Their morals, they lose their morals. They lose their moral compass. Type 1 if you think that's happening right now in America. We're losing our economy, we're losing our moral compass.
Uh-oh.
It would make sense that the BRICS nations are forming and getting so much stronger because everyone is watching us as the big bully on the block, and pride has came before a fall. Our country became way too prideful. As a matter of fact, when my mother was given just a handful of weeks to live, that was when the doctors decided to put her on silver treatments. Isn't that nice?
Silver treatments.
Bacteria cannot develop on a resistance. Cannot develop a resistance to silver as they can with antibiotics.
Listen to this.
Think about that. You know, I truly believe that there are people in this world or companies that actually want to keep us sick. Would you agree with that? Type 3 if you agree with that. And I believe that there are inventions that are coming out right now, discoveries that are going to be using silver to help heal people. But it sounds sad, but it's true. There has to be some kind of revolution. I have been warning people about these hard times, and I believe they're hard times right now. There are a lot of people that don't see hard times. They are seeing their credit card debt going up, their cost of living go higher, their extra money in their bank go lower, yet they don't see these as hard times.
The name is...
I believe these are hard times.
Economic...
I believe there's just enough pressure
TP.
to keep the average man and woman in this world under enough stress to where you are not able to function normally. You're not able to dream dreams, have the ambitions you used to have a mere 5, 6, or 10 years ago.
Yeah, that's right.
And
that's right.
I believe one way out of that is to get into God's money. And I say God's money as in God that created this world, that created silver, created gold. There are personalities on social media that talk about God's money. They don't believe in God.
Damn.
They completely abhor the thought of God and have on record of saying that. So I want to make sure you understand when I say God's money, I'm actually talking about God created this. And I believe it will be the last phase in a total collapse, and it always is throughout the dawn of time. The Romans, the Greeks, the Ottoman Empire, all these different empires that created a fiat currency only to devalue it rapidly.
Wow.
It's this that ends up on top at the end. And then the cycle repeats itself. A new currency is printed because the dollar's never going away. It gets so devalued, they go, let's just start this over again. Let's just change the color of it, like in The Wizard of Oz. Or let's just, change the standard. Do we back it with something? Got it. But this is what ends up. And the sad thing is that this is going into vaults for corporations like Tesla to use it in their batteries. Or it's going in vaults to use in cell phones.
They're actually pretty close.
Wouldn't you like to know?
He's
and I'll throw out
probably his
the
brother.
Bitcoin idea, right? Wouldn't you like to just say, you know what? I'll just buy a few coins, just a few.
Because they have been together in a live stream
you never
before.
know. Someday they're going to be worth something. And instead of going and buying
So
some
I wouldn't be
crap
surprised if they're
that I
actually
don't
brothers.
need, that I'll stop using 6 months from now, or going out to a meal that, hey, I can definitely skip meals. I'm just going to go ahead and buy some silver. I think it will honestly be one of the greatest, or I actually think it will be the greatest deal of your life. Because when you hear these clang together, you feel the resonating frequency.
Yeah,
there's something different about it. And just in the palm of my hand as I'm playing with these coins, can you hear them? Type yes if you can.
Bro, wasn't that talking about the frequency with Kat earlier today? I kid you not, bro.
Point being is that
hold on,
it's going to give you a financial education.
Let me see.
It's going to open up your eyes or your ears just a little more. And when that happens, you have the opportunity to take in a whole new type of financial knowledge.
I can't even go back and chat anymore.
And that's why I think the 2 silver coins are so important. And then to be able to sit there and look at them and say, I own something that 99% of the world does not. I feel good about myself. Well, that's like that one first step to change.
Oh, she definitely.
And then all I
knows
want you
about
to
that.
do is change a little more.
Facts.
And a little more. The reason why I got that comment in the beginning, these were tarot card readers and people with no financial education trying to sell people silver 4 years ago. Like, whoever that was is a complete and utter moron.
Hey, Cat is a tarot
Because
reader, right?
it's going up in price. If you bought it 4 years ago, you sell it today, doubled your money. I know a lot of people on this channel that have emailed me over the years and thanked me for showing them something that doubled their money.
Word.
But it's a lot more than just the value of it. See, everyone's looking at the monetary value of where they put their money. And sometimes you need to be looking at the cerebral or the mind value. If I spend a little bit of money on something different that I've never done, is it going to open up my eyes to something new? Yes, it will.
Word.
You know, I became the economic ninja because I became so fascinated with learning about finance. I dove into every market there was.
We are all
Because I couldn't get enough. I wanted to be fully diversified, not only in my portfolio, but in my understanding of financial markets.
You are brilliant.
Do I know it all? Heck no. Am I going to keep learning?
But we are all brilliant together.
And I want all of you to enjoy that. And I will tell you that out of all the things I've ever invested in, out of all the opportunities I've ever had, there's nothing that made me feel more enlightened.
Thank you.
More at peace and more excited than in, it was like 2008, 2009, when I bought my first ounce of silver when it was $18, whenever that was. It was a 2-ounce hand-poured bar in a pawn shop.
Wow.
And I paid $18 an ounce, which means it was probably about $16 an ounce, the spot price.
Wow.
And I believe you're going to see this go so exponential. And there's still propaganda out there that people are mongering fear that you have to buy a collectible coin because the government's going to come take it. I don't think you understand. And that fear mongering should stop, but it's not, because they can charge you horrible amounts per coin because it's in a piece of plastic and it's rated. They can charge you 4 times the value of the silver in there because they're fear mongering you.
Right.
But when the government figures out nobody's got it and they know, who are they going to come take it from? Is it really worth the bad publicity? No. Back in the 30s, everyone had gold. And here's the question. Are you going to be led by fear?
Listen to this.
Type 5 if you're saying there's no way I'm going to be led by fear.
Listen to this.
You know, there's some people every once in a while. Out of probably every 10,000 comments, I get one comment that says, you stop telling people to type a number? No, you should just stop watching the channel. Because I love hearing you speak. I love seeing you speak as I'm talking to you. I want to get some feedback. And I love saying things out loud, declaring things, and making things happen. If you're here to be entertained, this probably is the place for you. But if you're here to go crush it, this is definitely the place for you. I'm not gonna lie.
Hell yeah.
Hope you got something out of this.
Hell
Thank you so
yeah.
much for watching. Thank you.
Hell yeah. And now those bars are worth $62 an ounce. Can you believe that? Can you believe that? A Mexican ounce is? What's a Mexican once? Once? Mexican once? Yeah, man. So it was since then that, you know, we got more into the whole conversation with, you know, about silver and precious metals and what's been happening and doing the research, and, you know, pretty much like this is what's gonna be happening soon, and everything that's been popping up in Twitter, and we're like, yo, this is really happening. And then afterwards, after that Look at that. After that, May 19th, 2024, here I posted that gold breaking out on the 5-minute and daily chart and silver making new highs. Try to remember that. This was, look at that. This was when it broke out of $30 and went as high as $32.14 at this screenshot. And here's gold. Gold at the time was $2,435.71 at the time of the screenshot. Again, that was on May 19th, 2024. Wow. So, bye. ¿Por qué va gritando? Dude, at that time of GameStop last year, May 20th was at $23. It seems like we're still stuck around that same price point. That's interesting. And then I think it was after that we started, I think, doing research on stocks that had that are heavy into silver. You know, then you have your EXKs, your Vizsla, you had HYMC. HYMC wasn't until later, afterwards. Wait, what is this? Okay. Silver coming back is June 6th. Here had posted from Echo the Truth. This was June 4th. Says here, for the first time we have the figures to reflect the dollar to silver and dollar to gold ratios after months of contraction. The M2 money supply has recently seen an addition of over $50 billion, signaling a shift towards growth. The US debt clock now displays a striking $153 per ounce for silver, highlighting the escalating demand for precious metals as a hedge against economic uncertainties. It's essential to note that there are nearly 400 paper contracts for each ounce of silver, indicating not only a potential short squeeze, but also a significant reset of the global monetary system. To achieve this, all short positions must be closed to reveal the true intrinsic value of silver. With these dynamics in play, a $12,000 per ounce silver is not an unrealistic projection. Can you imagine that? 12,000 per ounce of silver. That is frightening and exciting at the same time. Oh my goodness. And then around July is when I posted the screenshot of EXK. Remember? Yeah, so we were on it. We were on top of a lot of stuff for the past 2 years. Yeah, Clover. That guy, Craig Craig, he was how do you call it? Craig was the Clover man. So we let's see.
What's going on, you scared motherfuckers? No, Lou's dying, it's dropping, Clover. Haven't you people learned anything fighting the devil for so long? Of course the devil's gonna fuck with you and drop things down. That's what the devil does. Him too. Listen, relax. This is normal. My position is still in AMC. My position is still in Clove. That's it. Done. What do you think? AMC is not going to hit 60, 70, 80? You're out of your fucking mind. You think Clover's not going to hit the 30, 40, 50? You're out of your fucking mind. Okay, people. You have to, this is that moment. Relax, motherfucker, I got you. You got to decide for yourself. Are you a day trader coming in, swinging in and out, taking some profits and leaving? Or are you a person that takes a position in the short squeeze? There's two different sets of emotions that go on there. One of them, if you take a position in a short squeeze, you really have to lock down your emotions and understand something that you're going to be holding for a long time. You know, bag holder, whatever. If you have the emotions of a scalper and you're in a squeeze, yeah, you're living in hell. You're in hell. You really can't be that way. You understand? So my thing is I look at Clove as money that yet has still to be grabbed. So whatever, up, down, whatever, I know what's gonna happen. Okay? Is the devil own it? Yeah, I already said that the devil's in everything. Fuck do I care? I can make money, I can make money.
Exactly.
People took money, they ran and stuff, whatever. Like I said, I don't tell you when to buy, I don't tell you when to sell, I don't tell you what apps to use, what trading platform, whatever.
Facts.
I basically stay neutral, try to give you my feelings like if you guys are here with me. So, I'm still with it. And you know what, like, Clove people, take an example from AMC people. Look how AMC people got fucked up for so long during the day, and then aftermarket thing climbs and pre-market. Listen, there's a reason why.
4 years
the
later,
devil
still
lurks
getting
between 9:30 and 4. Okay, so just take it easy. AMC people, you already know this. I've been around. I train you fucking people. Of course they want to fucking scare you, fuck you up, everything. But have they covered? Actually, okay, they covered. You're in this.
Have they covered? Ooh, he was the first one that said it, and then this motherfucker was copying.
I'm talking to you too. How many people hold a 401k for 25 fucking years, and then at the end of the day they retire and decide to cash out, the market goes down, and your fucking 401k basically says, "Oh shit, I lost half of my life paying into this." You gotta understand something. You wait a couple of more weeks, what happens? Good stuff. That's just how it's been. AMC is not going down to $9, $10, $11, $12, and it's not doing it. You're not gonna lose money. You really need to be calm. That's why I'm not, whatever. As far as Clove, fuck, it's a wild ride. Let it go, let it up, whatever. Let's say it goes up to $80 fucking next week. Beautiful. Then you make your decision. I guess I was born in like, fuck it, let's get in, let's make money, let's get out, whatever. That's what it is. I guess a lot of people are trained with the idea of like, you know, I own Disney for 50 fucking years. You and that fucking rat ain't going nowhere. All I'm saying to you is, one, if you're gonna be in the stock market, control your emotions in the morning.
Yes.
I actually had a performance coach in where we were at, and she was a wonderful, scary fucking woman. But she said something interesting. One of the reasons why they pick up the phone and fuck with you early in the morning to see if they can get you to come on in, it's a great opportunity. Oh my God, you gotta sell. Is because when you wake up in the morning, your brain is transitioning from the subconscious to the conscious, and it's in that realm of fear. Even if you have nothing to fear of the day, what's going on, you're still in the realm of fear. Why? Because when you're sleeping, she told me, your brain subconsciously is prepared for nightmares.
Ooh.
Believe it or not, you're actually going to sleep preparing for bad thoughts.
Uh-oh.
You don't want those bad thoughts. But guess what? It could be this. So when you wake up, sometimes it takes a couple of hours to get out of that realm of thought process, which is subconscious, conscious, and that fear. That's why the morning is something, when you're dealing with money, is a very touchy subject. Okay, so you have to also second guess, what state of mind am I in and what am I doing? Take this for your life entirely. You know, my old man and his crew used to tell me that when they fought those fucking Chinese, long time with when they fought those fucking Chinese, they didn't wait for the fucking sun to come up to fucking attack them. They fucking hit them when they were like 2 more hours of sleep. Why? Because in that moment, the brain is not operating at its fullest potential. So, what you're feeling in the morning is that cloud that everybody has. There's no secret. Most people wind up dying between the hours of 7 and 11 o'clock in the morning. Why? Car accidents, fucking heart attacks because of emotion, things like that. Also, people make money mistakes at that time in the morning. Sometimes you get lucky. You know, I pulled out, I did this, I got in, whatever. Control your emotional state as an investor. Control your emotional state as a day trader. Control your emotional state as a holder on the opposite side of a squeeze. That's it. I don't even have nightmares anymore. I know, motherfucker. You stopped having nightmares when you started rolling that paper. It's all a fucking illusion. This is the Matrix. This is the Matrix.
Ooh.
That's what the market is. You can make all the money you're ever going to need in your life and never have to lift up a box.
Damn.
Do you understand? So that's all it is. It's just an illusion.
Facts.
You make money, that's how it is. Stay calm. If you want to sell off, sell off. If you want to stay in, stay in. I don't get involved in it. I don't pump things. I don't do anything like that. I just said what I'm coming into. Guess what? I stayed in. I'm there right now. I have beliefs on how things go. If things change, I take a different strategy. But at the end of the day, I'm like, right now, I have no reason to bail out. You think that the FOMO is done with AMC and Clove? It hasn't even started yet, especially with AMC. AMC, let us get into the 80, 90, and 100, and you'll see what the fuck happens. But anyway, Melania, love you. Say Trump, I'm here. It's fucking a beautiful day in New York. I'm going to go walk around, get some lunch, and then come back. So, control your emotional state, or your emotional state will control you. That's all it is. Remember, a lot of times poverty is based on emotions, okay? And then all the shit that comes with it, you don't want to go in that world. If you're uncertain about something, pull back. Pull back, think, and say, okay, is this going to fuck me up, or is this going to help me? And then do that, at least between the hours of fucking 9:30 and 12. Listen, guys, I'll tell you something. Pre-market, whatever. 9:30 at bell open. Most motherfuckers wind up taking profits from the pre-market. They do that to about 10:30 or so, like that. Then you're gonna have obviously people fucking around throughout the day, stuff like that, lunchtime, whatever. But you average out. Nobody's dying. That's how it is. Love you, motherfuckers. Don't have no fucking emotions, okay? Don't be a weak transmethadite. That's what he will tell you, okay? Love you, motherfuckers.
Oh, man. Dang. That thing had the biggest that big walk pattern on that daily chart. That was back in October 2024. Sheesh. Silicon Valley gonna be taken over by data centers. Oh my gosh. This is Clove right now. This is Clove right now at the moment. Clover Health Investments at 266. $2.66. 6 days ago, Clove, AI-driven care model and strong retention fuel rapid growth and path to 2026 profitability. Strong membership growth and profitability are driven by proprietary AI-powered technology, high member retention, and a focus on core markets. Financial outlook is positive with a 4-star rating and continued SG&A leverage expected to support 2026 GAAP net income profitability. That was based on Clover Investments Citi Annual Global Healthcare Conference 2025 audio transcript. Listen to that. Wow. That was as of recent. This is gone. DMRF is gone. Sandstorm. That's gone. Vizsla Silver Corp. $5.27. It's gonna be jumping soon. PSLV. SLV. Up at $56 a share. Sprott Physical Gold Trust. TSI. Huh. All right. Per barrel. Oh, you know why? Sheesh. Oracle knocks stocks as Fed message weighs on dollar. What happened to Oracle? I heard Oracle went down like Fraser. Oh shoot! Wow. Damn, Oracle from 231 all the way to as low as 196. Wow. Okay. Oh, Bitcoin is dropping. No way that this is actually playing out. Is this playing out? Hold on. This literally is playing out. This is playing out. Is there a bounce here? Yeah, it's playing a bounce right here, literally testing these trend lines. We were drawing this the other day. Let me go to the 4-hour real quick. Wow. Look at that huge rejection. Look at this. Look how this is actually playing out. This is supposed to be a big... So, I don't know why. I drew this. It's supposed to be a big-ass wedgie. This big-ass descending wedgie. And then somehow here, this on the 4-hour chart, created what it looks to be like a bear flag. But then again... Oh, wow. Okay. Last support somewhere around 84,000. Somewhere around 83, 855. Wow, that's a big drop on the 4-hour candle. And there's only 19 minutes left until this candle closes. That's a significant drop for sure. But you could tell, I mean, this is boom, boom, reject here. This is all in a ascending triangle, but this is kind of turning out to be a bear flag. Especially how this looks like on the 1 hour. This is losing. It's losing support. If this bounce fails and breaks down below 89,200, at least this will probably try to fall right back below. Hit around 88. Sheesh. There were two bear crosses here actually. One here, bull cross, bear cross. Yikes. Oh, so that means, wait, hold on. Let me check SPY real quick. If that's the case, SPY. Oh, SPY is down almost 1%. Oh shoot. No way. Look. Literally from the top of 688.97, and here to think that perhaps maybe we would see a continuation to break to new all-time highs after a market hours. This was literally just a freaking pump and dump. Look at the SPY. It's literally dropping in overnight hours, overnight trading session. Literally fell from 685, 686, all the way down to 680.20. No, this is nuts. That is nuts. Look at it on the 5-minute chart. What happened? Something happened. Why is it sliding? This is why I'm saying, like, just by looking at what, by looking at what Bitcoin is doing, and knowing that Bitcoin is sold off, his ass off. That's when you have to look at the SPY, because look, same thing being played out right now as we speak. There goes that big pump alongside with the reaction of the FOMC meeting, hitting as high as 94,500, and then getting its rug pulled, dumped to as low as 89,418. Goodness gracious. That is honestly, that is not what I wanted, because I really did want to save up as much as I can to be able to get into VIX calls. That drop itself, this big drop itself, and knowing the fact that the VIX closed at 1576 or 1577, that means the VIX will probably open back somewhere around 1680, 1690, probably hitting just over $17. Oh yeah. Just opportunity. I hate when they do shit like after market hours. Because that kind of takes away the ability for you to like to be able to, you know, get into plays like that. It's just so dumb, man. Let's see where XRP is at now. Oh look, XRP is about to break under $2. It's at It's at 2. H bar is just under 13 cents. IOTA is at 10 cents. XLM is just under 24 cents. XDC is just under 5 cents. XEN is 2 fractions of a penny and dropping. Quant is at 83.78. Clover Finance, gone. I don't know what's up with that. Who took the biggest loss so far? My cock and you. Cocking you with the big dump right there. Fetus. Artificial Super Intelligence Alliance. Oh, that's FET. Never mind. I thought it said fetus. Yeah. Wow. Sheesh. Buy low. It's time to vaca. I don't have a cow. What you mean? Oh, you're talking about vacation, not vaca. Okay. A vacay. I'm broke. I'm broke. I'm broke. I can't take a vacation, and I can't even ask my boss to give me a vacation. Like, true story. Flare is at a penny. Flare is at a penny. I'm so overdue. Shiba Inu also getting smoked. Where's Doji at? Oh, here. And Doge is at just below 14 cents. So yeah, I do want to say that. You know what? You know what? I'm gonna call it right now. I'm gonna call it right now. I'm gonna tell you right now what we need. What we need right now. Let me see. Where is it? Where is it right now? Where is it? I am PP, right? I am PP. We can get on the PP. Aquí. I was supposed to quit 6 months ago. Sure, I wish I could quit right now, but then what would I be doing? There's nothing for me to do. Daily? Is there some type of gap here, I think? Oh, I knew there was a gap here somewhere. This gap I placed here a long time ago. Zaddy of all zeros. No, not looking bullish at all. I think you should buy some calls. Financial advice. 85. Mr. Moisley. Do we have ourselves another gap right here? Yes, we do. Oh my god. We got ourselves a gap here to fill to the upside. Oh my god. Let's see, Boyle. Whoa, what is this? Oh, that's funny. When did I do this? Bro, when did I do this? I don't even remember. Boyle? This thing literally jumped. Boom, rejected right off that gap and then pulled back down. That's crazy. Where's Mo Lester? Ay. Wait, I'm so confused. What is this? Oh, squeeze. Oh, that's just okay. Never mind. It's a lot of gaps. You like? You like? I know you like. I know you like. Look at the weekly chart on Indo. Just look at the weekly chart on Indo. Hey, remember we talked about the what did we talk about? What did we talk about? When we talk about when the impact of crude oil price when it comes to geopolitical tensions. Remember that? Remember that oil markets add $5 to $20 per barrel immediately when geopolitical risk rises. And this happened with Iran tanker seizures, Yemen Houthi Red Sea attacks, and the Russian-Ukraine pipeline disruptions in 2022. So remember that? Remember that one? This is when it happened. The Russia and Ukraine situation, it was here. It was here. That was back in March. That was back in February, the end of February of 2022 to March. And it caused INDO to run from like 2 and change all the way to as high as, when was it that we said before? $86.99. This thing did a squeeze. So then the next event, you said something about 2022. I forgot where it was. I think it was this one. No, it wasn't that one. 2022. The Yemen and Houthi attacks, was that last year? That's probably around here somewhere. Well, unless it was this one right here. June of 2025. And then we have the situation with, I'm just gonna guess this here. This is just prediction, but I'm gonna guess that the next event is gonna occur somewhere here. Look how everything is looking tight in this part of the chart. I just want you to take a close look here. Right?
Así que me gusta a mí. Así que me gusta a mí. Así que me gusta.
Ya, tú ves.
Así me gusta. Ahí. Así. Ay. Tú tendrás que botar ese pajarito.
Go to sleep. Go to sleep, okay?
You know, it's funny how like the 200 SMA appears. How we have a good idea of where this where the resistance is. And you can see here we had a rejection here off the 200 SMA back here April of 2024. Again here around October 2024, rejected. And then now we have this event here, end of June 2025. Now we have another possible, maybe here, I don't know. Unless Unless we shoot up crazy. Oh, this. Oh, gosh. Maybe. Okay. Está brava. Está brava, mami. Está brava. And then now that we stack all of these together at the same time. Let's see, we stack this at the same time. Just like that. This is how how much we probably will get from here. Financial advice. Right, here we go. We're looking at 18. 14 to 18. You imagine this is how we do how we calculate squeezes? You imagine something like that? Yeah, let's take these 3 boxes here, right? We measure them, right? We just take the boxes here. Oh, look at that. Oh, look at that. Oh, look at that. Oh, look at that. Oh, look at that, from where it got rejected from. And then we just, and then we stack the boxes. Oh my God, this is how we do it. You heard? This is something to take a grain of salt with, okay? Because you heard that, even though you heard this first, yeah. So just so then here, this is what we do. This is what we do. Then we move this. Then what we do is, hold on. Then what we do is take another box, and then we go ahead and trace it from here, right? And then we just move the box, and then we put it right. We're gonna put it right here. All right, here we go. And this is where the next event is going to occur. Within the next year, going into the next year. So, damn, I wish you can show some fibs over here. Let's show some fibs from here. Let's see. Let's do it from here. Bam. Okay, there you go. Whoa, what is this? Oh, damn, what happened? All right, so I found a timeline. I found a timeline, y'all. This is gonna be the timeline, okay? Not financial advice. You heard it here first. The timeline is gonna be Was it time cycles? What is this? How do you do this? Okay, no, that's not right. Psychic lines? What is this? Okay, nah, that doesn't make sense. How do we, isn't there like a timeline thingy? Thank you. I forgot where that. Oh, here it is. So from here. So that means in the next 224 days. The timeline I just gave you is from now all the way until July of 2026. Thank you, Fishy. And then, let's see. So we can take, then what I'm gonna do is I'm gonna take this bars pattern from here, and then we're gonna go ahead and bring it here. Okay, here we go. Okay, there you go. I just gave you a squeeze. Can you imagine that? Oh. Es una traidora. I ain't got no, I don't know. I don't got no comment. I got no comment. I can't speak about anybody else. I just couldn't do it. I couldn't do it. Let me see if this were. I'm just too chill. Okay, maybe let me see 5. So if it, let's say if it doesn't go crazy, I would say $5 would be the target. First goal price target for INDO if everything does seem to follow through with what's happening with what the geopolitical tensions at Venezuela, maybe, if that makes sense. One second here. And I mean, listen. This is just for research purposes, educational, entertainment purposes, and this is not really. I mean, if this were to be the scenario, oh my goodness, like, then we would technically discover a gem, and figure out that maybe this realm of possibility go in our favor, and then things go crazy and blow up, and all of a sudden we have another event, and then INDO goes in another full-blown squeeze because of oil, because of crude oil, running past 60 and then blowing up to 70. Who knows? How does this play in this situation? I think crude oil would have to rapidly run up to 65 to 70 to see some crazy ass run on some of these oil plays. I want to be a part of it again if it happens. So being that it's being that it's at around 296, and mind you, and I I appreciate that, Eric. Thank you. And I know this is just, you know, me hypothesizing about this scenario, but knowing the fact that it's been in this range for such a long time, and mind you, since July, been hovering around 275 to 325 and back and forth. So it's like there's many swinging opportunities, but also at the same time there was this you might as well call this an accumulation period here, a huge accumulation period where you just load the fuck up, load the fuck up, like every week, every opportunity that you get to load up an INDO at this rate. Calculate the amount of shares that you wanted to buy, hypothetically speaking, not financial advice. Let's say $3 average, $300 gives you 100 shares, 100 every week. So 300 100 shares, $300, 3, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 20. I'm doing some bullshit math right now. 300 is 20. That's like $6,000 worth of shares. $6,000 worth of shares times $3. $3 average, so that's like 18,000 shares. 18 times 699. 18,000 shares multiplied by, if again, this is bullshit math, all right? Don't listen to me, all right? This is not financial advice. 18,000 shares average $3. If INDO were to squeeze back up to 86.99, you'd be up $1.5 million. How do you like my math? That would just be insanity. That would be insanity. Like, this is crazy. But I wouldn't mind. Like, I wouldn't mind just grabbing me a full, a little position on INDO, and just leave it and don't even look at it. But then I really want VIX. I wanted VIX. I wanted VIX, guys. I really wanted VIX. But SPY dropped so much during the overnight session the past couple of hours. Maybe they're just, making a profit on the downside, and then when everything is flat, then they probably bring it back up next morning, and then leading up to the Santa rally, maybe it will get to 700. Guys, come on, dude. And then that's when you go for the attack. That's when VIX will be at the cheapest, in my opinion. Not financial advice. We'll take a look at that. Let's go take a look at that. What was it? May? I think it was May 19th, if I'm not mistaken. Right, Eric? Let's see. Where was that strike at? Where'd it go? No, it wasn't this one. I think it was June 17, 2026 expiration. Here in the options chain for VIX, noticed that there was where did it go? No, No, it reset it. No, reset it. It reset. Dude, it reset. Oh, here. No, no. No, it's gone. No. Did you notice that? All right. So let me go back. All right, let me go back. Where's the... Okay, here. Yeah, it was June. Here, let me go back. Let's see, let me... Damn, that sucks. Bam. So here, the $47.50 strike calls for June 17, 2026 had closed with a bid at 74 cents and an ask at $1.76, which is a huge spread. I must say is a big ass spread. Spread wide than a butter on bread, and it only had an open interest of 32, but a volume of 80,088, which I've never seen. I mean, that's a massive amount of volume for that specific strike. I gotta see how it looks like tomorrow when market opens, and see if they actually jump back into it. Oh, and then you had the $23 strike calls with the bid at $2.75 per contract and the ask at $3.80, with an open interest of 4,858 and then a volume of 20,152. So those were the two strikes with the craziest volume by the end of market day. Look, you're gonna hear the bird talking. Watch.
Mi kitty, mi kitty.
Uh-oh. We might have to donate the bird. But yeah, I will be looking. I will be keeping an eye on that one. You know what I'm saying? Yeah. SpaceX plans 2026 IPO at $1.5 trillion valuation.
He's bugging.
You're not gonna believe this? How to say stagflation without saying stagflation. Try something like conditions in the labor market are cooling and inflation remains somewhat elevated. Let's see what else is going on here. Let me slide into your DMs. Futures have turned sharply negative suddenly, with S&P futures down 1%, Nasdaq 100 down 1.5%, and the VIX up nearly 3%. Ay, ay, ay. Oh no, look at this. DoorDash driver accused of spraying pepper spray on Arby's food after dropping it off at a home in Indiana. Mark Carden says his wife started choking and gasping after she started eating the food. I noticed my wife had started eating and she started choking and gasping. Oh, I had looked at the bag and seen that there was some kind of spray or something, so I pulled up my doorbell camera and seen that the lady who dropped the food Off had actually tampered with it on purpose for some reason. That's crazy. The incident is reportedly under investigation by the server's office, which could result in a charge of consumer product tampering, a level 6 felony. Oh, that's... What a... Yo, why would you do that? Like, what's the point of even doing DoorDash if that's what you're gonna do? Yo, they're trying to sabotage DoorDash on purpose. So then DoorDash falls under, and then they go bankrupt, and then I won't be able to do DoorDash anymore. If I could go... Yo, hold on. If I can go to any state, what state would I go to? Wow. Interesting. If I could go to any state, what state would I go to? I mean, no state that is infested with drogas. I don't know. Dun, 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 dun. Hawaii. No, I'm both. Eric, I'm actually both. Mom's Dominican and my dad is Puerto Rican. Boat fresh off the boat at 68, 69, 68, 69, oh, 68, 69, 68. Yo, Mexico imposes up to 50% tariffs on China. Mexico can't afford tension with the U.S. if it doesn't stop tariff circumvention. The U.S. can hit Mexican industries with penalties. Losing China would hurt a little. Losing the U.S. would collapse Mexico's economy. This move is pure economic realism. It says here, most people are thinking it's the U.S. Nah, it's the cartels. China has limited the flow of fentanyl precursors because of deal with the U.S. and the cartels ain't happy with that. Damn. Mexico imposing up to 50% in tariffs on China. Excuse me. Breaking, In-N-Out just banned 6-7 after the trend turned stores into zoos and employees finally snapped. I never understood that stupid ass like trend, bro. Like, for real. That comes to show you like how fucked this generation is. And there's these teenagers, bro, like, for real. She makes no sense. Thank you, Eric. Thank you, Fishy. Yeah, look at this. Getting up to go to work because XRP hasn't reached $589. The Clarity Act bill shall be passed before Christmas. Now it is at the Senate. After the Senate, it will go to Trump. Those lazy fucks only work until December 19th, which is next Friday. Yesterday, the regulators asked the Senate to pass it before Christmas. Wow. We stole your girl, Best Buy.
Talk about trading your old consoles, games, and accessories to GameStop. Bring them in and we'll assess the condition, then give you cash or store credit.
Wow. Nah, what is this? Amazon to invest $35 billion in India and create 1 million jobs by 2030. 11 hours ago, panicked sellers bailing from Nvidia along with the shorts. Ugly after hours. This is crazy. What is going on? There will be tales told about the OGs of the Lion's Den and all of the royalties of the Lion's Den. We will conquer oil and silver, and we will conquer the memes once again. We will make sure that we enter from the bottom and get out from the top, because we are the future. Diamond hands. What is going on with AMC? It looks like it's falling farther from the 200 SMA. Where the hell is it going? Oh yeah. Where the hell is it going? Oh yeah. I wanna order some taco al pastor, some carne fritas, and some enchiladas, and some chicken ritas, and cheeky pee. It looks like we got a little flippy right here. If I don't know if you notice, but there's a little flip that happened over here. And I'm like, you know what? It looks like AMC is gonna go back down to $2. When was this? Oh shoot! I didn't. I totally forgot AMC reached $2 back in November 21st. 205. And then mind you, like, this thing looks like it just rejected the 9 and about to come down again, dude. Fuck that. Yo, I kid you not, yo, that tamale was so good. I gotta ask that lady to bring me 2 more. This Korean lady that goes into my job and like, cause whoever that lady is that she gets it from, I want those tamales, bro. That tasted so good with the little chicken, with the little jalapeno in there, with some red sauce, some cheese. Oh my god, that harina was, that thing was perfectly formed too. It didn't even like break apart. Like it was like perfect. Yo, I need to take a shower. I just realized I've been sitting here and just like hanging out and everything. I just completely forgot that I needed to shower. I smell like onions. I smell like onions. I smell like onions. I smell like garlic. Smell like onions. No. There's no way that there's no way that actually happened. Sick. The military is using a secret iPhone, and Apple removed the entire camera system. A video just surfaced showing an iPhone that looks completely normal until you flip it over. No lenses, no cameras, just a blank metal plate where the camera should be. Why? Because certain military units use custom iPhones that can't record anything. No photos, no videos, no evidence. Nothing that could leak classified material or expose what's happening inside secure bases. Apple builds these devices specifically for government contracts, phones that look identical to yours but are hardware locked by design. And if they can produce a no-camera iPhone for the military, what other versions exist that the public has never seen? You think you know what's inside your device, but clearly there are multiple versions of the iPhone that never hit the shelves. If they can remove hardware, what else can they secretly add? Just for speculation purposes. Lion, you come to Cali, you never leaving. My nephew lives in Cali, and I was wondering like, I know he's somewhere in LA. Well, I don't know where exactly, but I gotta find out. I wanna see this. See what's gonna happen here. Oh, I wanna see this. Apparently there's karma back. Karma happens with the truck. Oh, the other truck is gonna help him. No way. Oh, no way, dude. Nah, really? No way. That's what you freaking get, you idiot. That's what you freaking get, you idiot. That's what you get. Oh, you posted on What? How much this card is worth? What? Nah, what? Why does that card look big? The cards don't look that big in my... Bro, there's no way that... Dude, that's the big card. You got a promo, but do you have the actual card? You gotta have the actual card. Oh, yo, dude, I totally forgot. I forgot to open. This whole time, I had a Pokemon booster pack next to me that I didn't even open yet. Yeah, it's a Palkia. If you got... Nah, you ain't got no small hands, bro. There's no way. Those are one of those like big giant promo cards. But it also comes with the actual card. I'll look it up right now. Origin form Palkia. There is a secret rare that raw. It cost about $72.55. If you had a graded on the PSA 10, but that's a big pop though. There's like almost 14,000 there's like almost 14,000 of those cards in the grade 10. Cost about $180. So that card in particular, let me see. Okay, I found it. Yeah, unfortunately, that's only $1.35. That's messed up. Go live? I don't think I can stream. I don't think I can stream his own stream. That would be a conflict of interest. I couldn't do that. To be honest, I don't. But here's what I will do, though. Here's what I will do. I'm gonna use this phone stand. I'm gonna use this phone stand right now. I'm gonna record myself opening this. Wait, hold on. I gotta do it the other way. I got this cheap. I got a cheap phone stand that I can use for recording and stuff. Let me see if it actually works here. No, you add the link. Add the link. He has the same Discord. Add me. Wait, I'm confused. Oh, you posted it out on the crypto chat? Oh boy. You add the link. Open the Discord like rants. Wait, what do you mean? I'm confused. ¿Qué es lo que tú estás diciendo, loco? Yo no entiendo. Yo no sé lo que tú estás diciendo. ¿Qué tú estás diciendo? Yo no sé lo que tú estás diciendo, loco. Mira dónde está. ¿Dónde está?
is at a all-time low. Considering we're at 157 last year, you can imagine how much we've cut out. And then we have current unearned revenue. What in the hell is that?
Add the Discord link so I can talk. Wait.
Oh, wow. Wow. Hey, guys.
What is he looking at?
That's carrying over.
Oh, the GameStop. Wait, wait, I'm confused. What you want me to... I've been on his show 3 times. Open the link so I can join you? For Discord? Oh. Wait, what do you... Add the Discord link so I can talk. Yeah, I'm so... Cause you got he has the same Discord add me. So you need to bro. What? Okay, hold on. Wait, what? Generate a new link. Is this what you're talking about? Somehow he drops the link and I can join you and chop it up. I don't know. I'm so lost right now, bro. Like, you gotta like take a screenshot and show me. Oh, that's cool. Yo, this is yo, I like this. For $5 and oh, this is gonna fall. Hold on, me. It's a little trippy. Oh no, what happened? No. Okay, yo, stay still, bro. Stay still. Quédate ahí. Mamón. Okay, stay. Like, no. Okay, maybe that might work, but I want this down. So I realized I forgot to open this Paradox Rift booster pack. And I'm gonna go and open this up right now and see what I get. Maybe I can get a big hit that I never expected to get. Yeah. Remember, it's one card to the left, one card to the right, one card to the back. We got a basic energy, that's a fighting energy type, fighting type. Then we got passage, I don't know, this looks like a little dweeb in the feet, and the corn, and the king, and hey, it's a meaning, me. Hey. It looks like a snow run. Knuckle stack. Future booster energy capsule. Attack uses 20 more damage. Oh, that's okay. Semi-sage, semi-seer, semi-pour. We got a Norman. I don't know who this Norman is. Draw 2 more cards. Okay. Oh, we got a Toad School. We got a Oh, we got a Toad School now. Alright, let's see what we get now. Ooh, I can feel the texture rubbing against it. Explode. Explode. And then we got ourselves a... Wait, what is this? Oh, come on, dude. A Satian? Ay, ay, ay. Ay, ay, ay. That hurts. It really does. Uy. What? Really? A romperle los dientes. Really? Yeah. He's bugging. He's bugging if he thinks that. It's not working? It's good for an hour. I don't understand. I should be able to see the welcome and everything, but I don't know, man. Oh yeah, eso, oh yeah, oh yeah, eso, oh yeah, oh yeah, eso, oh yeah, oh yeah, eso. No. Oh yeah, yo lo vi, yeah. Yeah, she was working for DoorDash and she did that. It's dumb. You tried it and you don't hear anything? Wait, are you trying to get into the chat? You're trying to get into the Discord voice chat, are you? You're supposed to go into this thing here, bro. You're supposed to go to voice channels. Who's that? Who is that? What again? Yeah. 8 wanted to be able to chop it up with you. 8? Who? 8 people wanted to chop it up with me? I'm confused. Who's the 8? What just happened? The ball just came out. La bola se salió, bro. No. ¿Qué pasó? Huh? First guess on the line of all trades. Fishy. Fishy, fishy, fishy. Fishy, 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 fishy. Oye, pero se salió la bola esto. Oye, eso. Okay, now there's no link. There's no link. You just gotta go in, hear us roar. Oh, dude, what happened? Oh, no way. Yo, I can't even. Oh. No wonder it's $5, bro. No wonder this was worth $5. Look at that. Échale. You gotta click on no hablo, bro. Bro, you have to. How do I explain it? You have to click on this if you wanna go into the voice chat. As a matter of fact, I don't even know if I have my thing set. No, I mean I could see myself talk, dude, but invite to voice. You don't speak Spanish? There, look. I sent the invite. Choose activity. There's no link. I don't think there's a link. Oh, that's what it is. No, I found it. 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 Sheesh. I was like confused. I didn't even know what was going on. Donde no mirar? What? Bro.
What is you saying?
If you can't figure this out, I'm about to. Dang, even though 1 hour seeing a death cross, that's not good. This is not good at all. What? All right, I think I gotta take a shower, bro. Yeah, I actually gotta take a shower. I'm gonna have to figure this out later. And it's getting late because I need to get ready to go to bed and go to work early. You let me know what you were trying to do on Discord and then figure it out later. Alright, so I'm gonna end the stream. I'm gonna go ahead and end the stream because I'm feeling tired. I'm feeling tired. Let me just give y'all a quick shout out, each and every one of you, for being in the stream with me. Fishy, for real, we'll figure this out later. Alligator. Later, alligator. Later, alligator. And big shout out to Chris. Thank you for the 5 LionOfAllTradez gifted memberships and the level 1 member for 14 months. Everything we talked about in this stream and everything that we say is strictly in our opinion. Just know that this stream and future videos will be based on education, research, and entertainment purposes. As you know, all of this is no financial advice given, as I am not a financial advisor. If you do seek some type of financial advice, hire yourself a financial advisor to give you tips and advice on trades that you would want to take along with your funds. Just know that you're your own decision maker of your own funds and your own trades. Based on the research that we do here, it's only up to you to make that decision on your own. Thank you for joining the Lion's Den live stream with yours truly, LionOfAllTradez. Much love to everybody. Again, thank you for joining. And I will see you in the next live stream. Oh yeah. Also, big shout out to everybody. Eric, Fishy, Johnny, James Price, Chris with a K, Zaddy of Old Zoodles, TP, Foxy Cat. Big shout out to Zelly, even though she wasn't on today. Decided to go somewhere else. I'm gonna kick your ass. But shout out to you. Much love. And I'll see you in the next. Peace out. Good night. Good morning.